Welcome back to the European Market Open. A minute to go until the start of cash equity trading. I'm Tom McKenzie. The debt ceiling drama is back. Guggenheim's Scott Meinhardt warns the Fed may hold off tapering due to risks from Washington, D.C. Here are your top stories. China's top forecaster sees GDP growth near zero in the third quarter due to virus curbs. Meanwhile, the Evergrande crisis sends shockwaves through debt markets. And IMF chief Kristalina Georgieva is accused of trying to influence a report in favor of China when she worked at the World Bank. She denies the allegations. Okay, let's take a look at the futures. They were pointing positive. They are in the green. It was a positive close in Europe yesterday as well. Travel and leisure were at the top of the pile when it came to the sectors. At the bottom was basic resources. The pressure on iron ore remains. UBS coming out saying that raw material will in fact drop below $100 in the next few months. So we'll see, of course, how the markets open up. On the read in the back of the US, you had a retail sales number that came in more positively than estimated in the United States, but the jobless claims numbers were a disappointment. In the retail sales question, when you look at the UK, that number, you're seeing a fourth straight month of decline in terms of retail sales. What does that tell you about the consumer in the UK, about the concerns about the pandemic and the question for the BOE? Let's check in then on the market open. The FTSE 100 brushing off the concerns about slumping retail sales, gaining 0.7%. Over in France, the CAC 40 is also stronger, 0.8%. And in Spain, the IBEX is also in positive territory, adding an additional 70 points. We're looking ahead to Germany. Can't see the DAX at the moment, but the election, of course, remains squarely in focus. We are now in the last week, just edging towards the last week of that run, where Olaf Scholz is still in the lead. There will be a debate on Sunday in Germany, what that means for the makeup of that country's politics. Okay, let's switch focus now to a question and a story around supply chains, chips and technology. Cisco chairman and CEO Chuck Robbins expects supply chain issues to ease by the middle of next year, but warns the situation is still very, quote, very fluid. He also sees some price increases being permanent, particularly with wages. Robbins spoke to Bloomberg's Jonathan Ferro.
We've been undergoing a transformation to shift more of our business to recurring revenue and software subscriptions, and we've made a lot of progress. When I took over as CEO, we had roughly $3.4 billion in subscription software. We exited last year at the end of July with almost $12 billion. So we have much more predictability in our business. We have visibility to software revenue that hasn't been billed yet to our customers. And we had remaining performance obligations last quarter of $30.9 billion. You couple that with the success we're seeing in the cloud space with web scale providers, the 5G transition, the Wi-Fi 6 transition, hybrid work, hybrid cloud. There's just so many tailwinds right now that we feel very good about where we are. And that was reflected in our Q4 product orders that were the highest growth in a decade at over 30%. So it's we wanted to express our confidence in the future, and I think we did that yesterday.
Your confidence in sales, Chuck, you know what the analyst community are talking about? They're talking about how much of that is going to fall to the bottom line. This came from Jefferies. We assume there's some conservatism in the guidance, as they'll certainly pick up some margin improvement as the business mix shifts towards software. Can you walk me through that, the decision to upgrade the outlook for growth, and just how much of that you can leverage, how much of it falls to the bottom line, given the transition you've just described?
Yeah, Jonathan, so we we guided over the next 4 years 5 to 7% revenue growth and 5 to 7% EPS growth. And there's two real factors in the near term that are influencing the EPS side. Number one is that there are so many of these areas that I just described that we need to invest in. You know, we made a decision to invest in these new silicon and new platforms that allowed us to insert ourselves into the next architectural transition with cloud players. And there's so many there's 5G and all the things that I mentioned already. And then the second piece is for some period in the foreseeable future, we have increased costs from a components perspective, from a COGS perspective, that is also negatively weighing on our gross margin. And so we think that over time, we will absolutely continue to see the benefit of the higher margins from the software business. But right now, we felt like we needed to be prudent given the pressure from a components perspective.
Chuck, on the components, can you give me a time horizon, just your base case expectations? How much longer are you expecting these difficulties, if we can call them that, I think we can, to persist? Is it through next year, into 23? What is it for you, Chuck?
Well, I was listening to the prior discussion about it not just being semiconductors, although that's certainly a big issue, but it's power supplies, it's substrates, it's memory, and then we have transport constraints at ports around the world, and so our current view is that it will not begin to get better until at least into the middle part of next year. And it's still very fluid, so we're not even, we don't have a high degree of confidence on that yet. But we do have, Gartner rated our supply chain team #1 in the world across all industries. So what I do know is that our team is working hard, and at the same time, we're focused on all the positive aspects of what our customers are dealing with relative to the return to office, the hybrid work, 5G, all the positive tailwinds that we feel.
We catch up with a lot of economists. Chuck, I know you watch sometime. They all talk about these issues fading over time. Transitory, the T word, is the word at the moment. Do you sense a bit more permanency? You're in the market, you operate, you talk about supply chains, logistics, all of that. You're a company, a CEO. Do you sense some permanency to some of this cost pressure?
I think there's aspects of it that will be with us forever. I mean, when you see wage inflation, typically that doesn't go away, right? And so, but there are also, I don't think there's one answer. Like we see memory prices go up, come down, and that usually is kind of transitory. But some of these other increases that we've seen are sort of new to us, so we haven't experienced them in the past. So we'll have to wait and see. But as we've talked about, we've like others have implemented price increases. We'll continue to look at what we need to do in that space. But all we're focused on right now is trying to do the best job we can to meet the customer demand that we're feeling.
Okay, and that was Cisco Chairman and CEO Chuck Robbins speaking to Bloomberg's Jonathan Ferro. Going green, Bloomberg is hosting a webinar ahead of COP26, bringing together global leaders to discuss how the financial sector can turn the tide on climate change, with a focus on the role of France. Speakers include French Economy Minister Bruno Le Maire, UN Special Envoy on Climate Action and Finance Mark Carney, and the CEOs of BNP Paribas and Amundi. Use the Live Go function on your terminal. That is happening now. This is Bloomberg.
This week on Bloomberg Green, climate impacts and mitigation. Hurricane Ida has ravaged the eastern United States, and worse storms are likely to come. What can America do to adapt?
It's never too late in the sense of we can always make things worse, and doing nothing will make it worse.
From rain to drought, Arizona introduces unprecedented water rations from next year. How will that impact business and agriculture?
Tires, fertilizer, mechanics, a bunch of things are going to be shrinking, so the economy is definitely going to be impacted.
And living with a changing climate. We look at the example of Rotterdam, a city at risk of sinking into the ocean.
A lot of people think it's going to cost us a lot of space and money, and we try to show that you also can use it to work on a better city.
I'm Kaylee Lyons in New York, and don't miss Bloomberg Green this weekend on TV, Quick Take, and online.
Happening on the ground right now, just in terms of consumer price tolerance?
We see a strong consumer right now, and you can see that even in the early starts to back to school and back to college season that we're really pleased with. And I think if we step back and look at the quarter, we see the evidence of that strong consumer.
From New York City.
We're in London, in Sydney,
in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
This is Bloomberg Daybreak with Lee.
Balance of Power on Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology.
And this is Bloomberg Green.
To recap the headlines.
You do not want to miss this story.
Really good news on the jobless claims front.
How are you thinking about those dynamics?
Happy Friday, welcome back to the Open. We are 9 round minutes into the European trading day. Some optimism once again, a second day of gains, at least at this part of the session. Of course, 9 minutes it's in its very early stages, but the Stoxx Europe 600 is gaining close to 0.7%. The UK, France, Germany and Italy all in positive territory at this stage. Across the sectors, you've got travel and leisure, top of the list once again, basic resources at the bottom, iron ore and the pressures around that raw material. On travel and leisure, we'll talk about the reopening and the news coming in our UK when we focus on some of the individual stocks. We can zero in on some of those names now because there is, again, some optimism around some of the attempts by the UK government to ease some of these restrictions. The red list, there's been a lot of speculation about this. Now you have a report from the Times newspaper saying that the UK's red list on international travel to 62 countries will be more than halved. That is from the Times. So more than halving that red list. That is playing to the optimism that you're seeing in the airlines group IAG. You're seeing gains there of 3.5%, but you're also seeing this flood across, of course, to other parts of the travel sector. So hotels as well, intercontinental hotels. If we can switch it on and have a look at that stock. The news again from the Times, as yet to be verified by us, but we have had some speculation this is going to happen in terms of reducing that red list for UK travellers. So intercontinental hotels also positive on the back of this news, up to 0.4%. The other story we want to bring to your attention is Euronext. There is a story, a line suggesting that Euronext, the stake by BNP Paribas, they are selling that stake. BNP Paribas, the French investment bank, selling their stake in Euronext, pressuring the shares there down at 2.7%. Okay, from the stock specific to the broader macro, a top forecaster sees China's GDP growth near zero in the third quarter. Christophe Borad, chief economist at Market Securities, thinks the Chinese economy will slow sharply due to the virus and the curbs put in place and property controls. Data released yesterday showed China's retail sales slowed in August, missing estimates. Joining us now is Simon French, Panmure Gordon chief economist. Simon, thank you for joining us. I want to start with the question of China that has gone, it seems, or is in the transition of going from a driver of the global economy. I'm thinking about a third of economic output globally, at least up until 2019, to maybe the problem child of the global economy. How concerned should we be about the slowing recovery that seems to be materializing in the world's second largest economy?
So I think an awful lot of this hinges on the degree to which the corporate indebtedness that has come to light through the course of Evergrande and the broader real estate space, the degree to which the state is prepared to try and inoculate that by bringing on liquidity injections or bringing some assets onto the state balance sheet. I think the degree of being concerned at a macro level would suggest that the Chinese authorities are going to dispense with that mixed capitalist and socialist model and actually allow corporate failure, which would have repercussions through the debt markets, which I think would turn China, in your words, into a problem child. But it's not my base case.
Okay, it's not your base case, but it is one of the potential scenarios. It also seems to be the consensus that China will kind of ultimately muddle through on the question of corporations like Evergrande. I just wonder if we can pull this out to the region and the global economy, Simon, using your expertise. If we do get to a point where, certainly where we now know we are with the Chinese economy, which is that the recovery is faltering, what is the read across for the rest of the region and Europe as well? I mean, thinking of economies like Germany and economies in the Asia Pacific like Australia.
Yeah, I think there's clearly some geopolitics to play in terms of the relationship with Australia. We've seen overnight some of the deals that have been made on the defence side with the US, the UK and Australia. What will that do to that really central trade flow between China and Australia, but broadening it out, as you say, into the broader Asian region and indeed into Europe? I think the question here in terms of the long-term risks on the Chinese recovery, perhaps go in the opposite direction. China has been a huge beneficiary of this pivot from services towards goods as the manufacturing hub of the world and has recovered far, far faster. If that is going to slow down, that may well be a function of this rotation as we move from pandemic to endemic, living with COVID, back towards services. And that big demand picture in terms of what has driven the Chinese recovery thus far actually starts to be muted, and that negative momentum, that negative credit impulse is the type of thing that I think actually is the far bigger fear for the region and for the global economy.
Okay, so keep focused on that negative credit impulse. Simon, I want to switch focus from number 2 to number 1 in terms of global economies. The US, Guggenheim coming out and suggesting that maybe you get a taper towards the end of the year. Maybe the consensus view on November is going to be pushed back a month at least. And they are highlighting the risks around the debate and the debt ceiling in Washington. What is your view on how we should be thinking about how the politics plays in to the FOMC's decision-making?
Well, I did think that during the summer, consensus was being pulled a little bit too early in the year in terms of the tapering timetable. So actually, I think some of the moves that we've seen in recent days are taking us back to where, I think, to be fair to the FOMC, they've been pretty consistent in terms of their guidance. And I think markets were right to expect in terms of the substantial progress the FOMC were looking for. We probably weren't going to get there until the close of the year. But the degree to which this debt ceiling conversation that seems to come around every year, it does come around every year, turns a bit more toxic this time around, given some of the spending commitments that come in the first 100, 150 days of the Biden administration. Does that start to take some of the momentum out of the US economy and change the reference, or at least change the data for which the FOMC are going to talk about substantial progress? I think we've all played this movie too many times to be too scared by the US debt ceiling. The political costs on both sides are just too high of digging your heels in for too long.
Yeah, there is a sense of Groundhog Day, isn't there, every time you bring up the debt ceiling and those political negotiations. Simon, over in the UK, we saw this UK retails print, so 4 straight months now of falling retail sales. What does that tell us about the trajectory of the economy here?
Yeah, I'm pleased you brought up retail sales because we've had data out of China, out of the US and now out of the UK in recent days, mixed pictures. But typically, many of your viewers will be used to retail sales being a typically cyclical indicator, a straight read across from retail sales to consumer spending and therefore their underlying health and confidence in the consumer and the household. But I don't think that's going to be the case this time round. And this isn't the difficulty in interpreting what this morning has been a soft print from the UK in terms of consumer spending. That was in August. And in August, you saw in the UK a pivot back towards greater consumption of services, experiences that many consumers hadn't been able to purchase for about 18 months. And that doesn't come up in the retail sales data, but it does come up in the credit card spending data, which was actually quite strong for August. So I think if you're taking that this morning's data print as a really negative for the UK outlook in terms of consumer spending, which of course is 2/3 of UK GDP, I think that's the wrong take personally. And we're going to get a lot of that kind of counter-cyclical noise in retail sales for many months to come.
Okay, interesting. So a more nuanced take on the health of the UK consumer. Simon, what is your view on the Bank of England, the inflationary pressures? You see these inflationary pressures, and we saw that more than 9-year high print of 3% or so. You see these inflationary pressures being sustained for at least 6 to 9 months. Where does that leave the BOE? Do we need to be pricing in 2 hikes next year?
Yeah, I think 2 hikes feels about right to me, actually. Probably back end of the year. I think some of the suggestions that the MPC, the Monetary Policy Committee, would go in February or May. I think it's more likely they would go in August and November. Why the Bank of England moving first? I mean, again, this is an international audience. You may say, well, look, normally the Fed goes first and the Bank of England goes on a 9-month lag. Why would the Bank of England go first? Well, of course, they haven't got this flexible average inflation target that the Federal Reserve has. The average of 2% over the last 20 years is UK CPI, so there's no catch-up to take place, even if that was in the mandate. So I do think that, first of all, we'll see the end of net asset purchases at the end of December. But then I think it's reasonable to expect, given that inflation will be sticky in that 3 to 4% range until about the end of Q2 next year, I think it's reasonable for the Bank of England to start to signal some very, very modest tightening, certainly modest by any historical parallel.
Okay, Simon French making the case for 2 hikes by the BOE next year. We appreciate your time. Have a wonderful weekend. Simon French, Panmure Gordon, Chief Economist. Okay, let's get the Bloomberg Business Flash now with Laura Wright. Laura.
Thanks, Tom. China Evergrande plans to let consumers and staff bid on discounted properties to repay them for billions in overdue investment products. We're told Evergrande will hold an online property event by September 30th, offering real estate instead of repaying retail investors in cash. Controversial British journalist Piers Morgan has signed a series of deals with Rupert Murdoch's media empire. News Corporation's News UK says Morgan will have a TV show airing in the UK, the US and Australia, plus 2 weekly columns for the New York Post and the UK Sun newspaper. The TV show, to be filmed in London and airing in early 2022, will be broadcast on a new UK television channel. Tom, will you be tuning in?
Piers Morgan, not necessarily my cup of tea, but I wish him well. It's an interesting signing. It's going to change up the media landscape, isn't it? Back with Murdoch, where he first started, as he said, when he was working, of course, at the Sun. Okay, Laura Wright, thank you very much indeed. Coming up, we chart the rise of so-called finfluencers, where those on social media platforms like TikTok offer a variety of advice and insights on personal finance. More on that next. This is Bloomberg.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
I support the new framework.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
There is wide disagreement on whether we've seen the worst of the Delta variant in terms of the upsurge in cases. Where do you fall on that?
So I see that the curve is continuing to go up, which is worrying. What is making me really nervous today is that there is this like accompanying surge in deaths as well.
Welcome back to the Open. 22 minutes into the European trading day. Optimism here in Europe. The gains you're seeing across the European benchmark up 0.6%. A slightly more positive read-through over from the Asian session. The futures in the US just clinging on to some very modest gains. You had Guggenheim coming out and warning that maybe the taper from the FOMC is going to be pushed back. Political wrangling in DC over the debt ceiling back in focus. Okay, Bloomberg's big take today is on so-called finfluencers, the teens and 20-somethings who can steer online conversation about life hacks, beauty products, and Hollywood blockbusters are now blazing their way into American finance in quite a big way. The finfluencers have apparently climbed up the ranks to become some of the most sought-out content creators on the internet. For more, we're joined by Bloomberg's Charlie Wells, who's been looking into all of this. Charlie, how significant a shift is this? What is happening? What are these girls and boys, these young people, what are they doing? How much of an impact are they having on people's investment decisions?
These Gen Zers.
These Gen, that's the term.
Yes, exactly. So they're really important for some of these financial firms. They know that they need to tap this Gen Z audience who, they haven't reached peak earning years yet, but they will soon. And they know that with these apps, they need to forge relationships very early. And so they're doing that with people who are on TikTok or FinTalk, as it's referred to, and Instagram or Finstagram.
Okay, FinTalk, Finstagram, are these going to stick? I don't know. What is going to stick is, and I wonder if this is the case, is this kind of demand for these kind of influencers, finfluencers. If, we're getting to the point with stimulus checks, we had those being posted to homes all over the US, of course, we had people at home, work from home. If that all changes, and that is changing, does that reduce the kind of demand that we have?
No, Tom, that's a really great point. And, influencer marketing is not new. This is something that's been happening in less regulated industries. We've all seen these influencers in fancy hotels talking about how great of a stay they're having or eating at fancy restaurants. And their influence actually seems to be waning. People sort of catch on to the fact that this is sort of advertorial content. And so I think some of these first movers, sure, they're making thousands of dollars per individual post, but as more people try to enter the space, it could become crowded and the audience could turn away.
Okay, and the earnings are pretty significant, $500,000 a year for some of these people. What are the risks associated with that, though?
Right. So for the finfluencers, some of the upside is really big. They get paid, sometimes, thousands of dollars per post. But for the brands, we're dealing with social media. And what we know about social media is that things that are boring don't attract a lot of attention. Things that are sort of outlandish or outrageous do. And when it comes to financial advice, the standard financial advisor would say that should be pretty boring.
Who are some of the people that you're following, Charlie? Who are the standouts? Who are the stars in this space?
Someone who's really striking is called Mrs. Dow Jones, and she kind of brings in pop culture to help educate people. So she'll talk about Ben Affleck and Jennifer Lopez and how that can help people learn about Bitcoin, or she'll talk about compound interest and kind of relate that to the rise of Billie Eilish. So entertaining for sure.
Entertaining, informative, some of the risks as well. So Mrs. Dow Jones, yes. That's your pick in this space, with a caveat, of course, that there are these risks involved. Charlie Wells, thank you very much indeed. That is the big take. Check it out on Bloomberg.com. Check it out on the terminal. Of course, if you are a subscriber, we hope you are. Coming up, COP26 is rapidly approaching with much of the focus on government's green investment. That conversation is next. How much further do we have to go? We're also going to be getting a view from the IEA chief about the outlook for oil prices. Plenty more ahead. This is Bloomberg.
and they will definitely help. The boosters, both the Moderna and the Pfizer booster, take antibodies back up to at least where they were, and probably twice or 4 times where they were at the peak. It's definitely teaching your immune system to recognize Delta better. The antibodies that people are making after a booster, they are better antibodies. And they're also probably then better antibodies at recognizing other variants in the future. If you get infected once, your immune system says, all right, here's how much I want to set aside of memory, right, to not get that again. You get infected twice, your immune system says, well, that didn't work, right? It should probably up. Up that zone. You get infected 3 times, your immune system is like, all right, this is a problem. It's really worth not getting sick anymore. And so the vaccines are essentially that, right? And if the immune memory was pretty good after the second one, what's probably going to happen after the third one is that it's going to be more stable. Even if the peak is the same, you're going to keep more of it for a longer period of time. It's a race, right? It's a race between the virus and your immune system.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Welcome back to the Open. We are 30 minutes into the European trading day. Here are your top stories. The debt ceiling drama is back. Guggenheim's Scott Meinhardt warns the Fed may hold off tapering due to risks from Washington, D.C. China's top forecaster sees GDP growth near 0 in the third quarter due to virus curbs. Meanwhile, the Evergrande crisis sends shockwaves through debt markets. And IMF chief Kristalina Georgieva is accused of trying to influence a report in favor of China when she worked at the World Bank. She denies the allegations. Let's check in quickly on the markets. 30 minutes into the session here. It's another positive day in the early session here in Europe. The handover from Asia has been a little bit more optimistic. It was a little bit mixed in China, but then things turned around. Technology seems to be back in favor, at least for the moment. The US session, the NASDAQ closing with about an upside of about 0.1%. The S&P was down, though. Some mixed data in terms of retail sales that came in above estimates in the US, but the jobs claims were higher than expected. Then that warning as well about the taper maybe being pushed back as a result of some of the political wrangling in Washington. It's also triple witching as well. So 3.4 trillion, that's Goldman Sachs, in terms of equity options that will be expiring at the end of the session in the US. Just bear that on mind as you look at the markets today. Again, optimism across the board here in Europe, up 0.6%. Let's look at the sectors again. It is basic resources that's back at the bottom. Iron ore is falling again, close to 4%. A warning from UBS, you could be below $100 on that raw material at some point soon. Again, a weakening demand in China is in focus, so a broad recross to the raw materials space. In terms of topping the list on a sector basis, you've got retail, consumer, and travel and leisure. Travel and leisure posted gains of more than 3% yesterday. That is the broad picture across these markets this Friday. Okay, let's focus on the US now and all the drama in Washington, which I gave a nod to. David Winston sent this report.
Build Back Better. That's the promise presidential candidate Joe Biden made to voters over a year ago.
It's time to reverse the priorities in this country. It's time to help small businesses. When the federal government spends taxpayers' money, we should use it to buy American products and support American jobs.
And that's the plan President Joe Biden laid out to Congress starting last March. But from the beginning, he insisted he would not just borrow to get it done, that we had to figure out how to pay for it.
The investments I'm proposing will be fully paid for over the long term by having the largest corporations, including the 55 corporations that paid zero federal tax last year, and the super wealthy begin to pay their fair share.
And this week, we got some specifics on just what it will take to pay for what the president wants. It may not be as dramatic as the fashion statement made by Representative Alexandria Ocasio-Cortez at the Met Gala this week, but it still would be the most sweeping set of tax increases in nearly 30 years, including raising the top rate on personal taxes, increasing taxes on capital gains, and imposing a 3% surcharge on anyone making more than $5 million a year. And it's not just individuals who'd get hit. The top corporate rate would go up to 26.5%. There'd be new levies on overseas corporate income, and the carried interest break so beloved by private equity would get cut back further, applying only if you hold the asset for at least 5 years before you sell it. Not surprisingly, Democrats and Republicans see these proposals very differently, with President Biden's chief economist claiming the corporate tax changes would bring more investment onshore.
The core values the president has put forward is reverse the most negative impact of the Trump tax cuts and get this corporate tax reform right so that we are encouraging more incentives to invest here domestically.
While Republicans warn these hikes would make American industry less competitive.
They'll be crippling for Main Street businesses. Certainly they'll land on working families, but as importantly, we're going to drive U.S. jobs overseas. And this is trying to fight our way out of a pandemic. It is the biggest economic blunder I've ever seen a country make.
It's a fundamental clash of wills and of philosophies. But with a Democratic majority in both houses, it looks like we're in for a change. The question is, how big will it be?
Okay, to the political wranglings in Washington to climate change now. The world's most important climate summit, COP26, is rapidly approaching. In November, representatives from nearly 200 countries will try to reach an agreement to accelerate climate action. Much of the focus will be on government's green investment. Analysis by the International Energy Agency has found that less than 15% of post-pandemic public spending has gone to clean energy projects. Joining us now is Fatih Birol, IEA Executive Director. Fatih, thank you very much for joining us this Friday morning. We appreciate your time as ever. Give us the top view then on where we stand in terms of the commitments, the pledges by governments around the world, the targets, and where we are in reality to meeting those.
Thank you very much. I mean, there are two news or two trends if you look at this year, and they are unfortunately conflicting trends. One of them is on the political side. There is a huge political momentum. All European countries, including UK, United States, Canada, Japan, Korea, China, they all committed their governments, their economies to a net zero 2050. It means they committed officially to reduce their emissions substantially, which means reduction of use of fossil fuels at the end of the day. This is the commitment, and these countries, if you put them together, they make about 3/4 of global GDP. This is trend number one. Trend number two, according to our numbers, IEA's analysis, this year again, we are seeing the second highest increase in global emissions in the history. So what I see is that there is a growing, a widening gap between the rhetoric, what governments say, and what is happening in the markets in the real life. This is something that I think we have to all take note of.
Yeah, absolutely. Really important to point out. So the gap between the rhetoric and the reality on the ground. A question around those emissions. To what extent is that tied to the bounce back post-pandemic? And do you expect that to be sustained? Or can we to some extent look through that and get back to some kind of new normal where maybe emissions are starting to rise at a less aggressive pace?
I think it is mainly due to the rebound of the global economy. As IEA has already during the COVID times, we said, don't think that the emissions will continue to go down like in those COVID days, lockdown days, unless there are strong policies coming from governments to make sure that those declines were structural. And those policies didn't come, and with the economic activity restarting, with the existing technologies, we see a rebound in the emissions. Having said that, I believe even there are no major new policies immediately put in place, enacted by the governments, the emissions will be not as high, the trend, as before. I don't expect this because renewables are growing very strongly. I mean, just to give you, let me give you an example. Last year, almost 90% of all the power plants erected, installed in the world were renewables, just to give an example. Electric cars are penetrating the markets substantially. So we will see a much softer trends in the emissions, but this is, of course, not enough by far to reach our climate goals.
No, it's not enough. And you are an advisor to governments around the world. They listen to you. They respect the data that you put in front of them. What are you hearing from government leaders about the necessity to meet that gap, to close the rhetoric, and to ensure that there is government funding and policy action that can align with what's happening in the private sector?
Now, you are right. We work with almost all the key governments, all the governments actually around the world, and many governments now asking the International Energy Agency to design a roadmap for the energy sector, what they have to build in terms of the power system, in terms of their transportation, industry, decarbonization, and how should they retire their existing old infrastructure. We are working with the governments, and I can tell you that there are two drivers for the governments to push the clean energy. One is being responsible and being on the solution side of this climate problem. This is number one. But there's the other one, many of us may be missing. Many governments would like to be a leader of the next energy market, next clean energy technology around the world. If not leader, having a position themselves, their economies rightly, as they are seeing that the next chapter of the energy world will be very different than what we have today, and much, much different than what we had yesterday.
Okay, Fatih, it'd be remiss of me if I didn't get your view on the gas price situation that's been playing out across the world in the last few weeks. Do you think gas prices have peaked at this point?
I think we may still see gas prices a bit high for the next days or weeks to come. And most important factor here would be in the short term how the winter conditions will be. With a harsh winter, we may still see a push up of gas prices in Europe and in Asia. And this is also, as we discussed before, this is also mainly driven by the very strong demand as a result of the economic rebound in Europe and in Asia.
Fatih, on oil, we're looking at, what, around $75 a barrel for Brent. We're back to close to those 2018 highs. Do we get to $100 this year?
I would be surprised if we see $100 this year, even though we have to be prepared for everything when it comes to oil markets. The rebound is very strong. The demand we expect this year higher than 5 million barrels per day. And if there are no surprising policy decisions from key producing countries, I will be surprised to see $100 per barrel, and even so, it will not be a long-lived spike.
Okay, Fatih Birol, we appreciate your time, as ever, on the importance of closing that gap between the rhetoric and the reality when it comes to climate change, and not seeing $100 barrels, at least by the end of the year. IEA Executive Director. We have plenty more coming up on the show. Do stay with us. The markets in Europe are positive as things stand. The Stocks Europe 600 gaining 0.6%. This is Bloomberg.
After 16 years in power, actually, remains one of the most popular, if not the most popular, German politician ever. Who's the right person to fill those shoes?
Well, whoever is going to be filling those shoes is going to have a very hard time. Look, as the Merkel era ends, most of the certainties which we Germans, during 16 years of Merkel, tended to take as forever are evaporating before our eyes. The eternal assurance of the United States always protecting us, that's gone out with Donald Trump. The certainty that we will build an ever closer union, the EU, has gone out of the window with Brexit.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
Welcome back to the Open. We are 45 minutes into the European trading day. Gains of 0.6% across the European markets. The standout is the IBEX, Spain, gaining a more than 1.3%. Your futures, though, in the US are just edging negative. Euro-dollar currently stronger at 117.75. Okay, the IMF's managing director, Kristalina Georgieva, has been called out by a report for the World Bank. She's been accused of applying pressure while she was the bank's CEO to boost China's position in a ranking of economies. She says she, quote, fundamentally disagrees with the findings of the report. For more, we are joined by Bloomberg's Ender Curran. Bloomberg's Ender Curran, let's start with you there. What is the significance of this report? How potentially damaging could it be?
Well, it is significant, Tom, in the sense that it puts the head of the IMF right in the crosshairs of the US-China political tensions, and that's not where the IMF wants to be. As you mentioned, this all goes back to Georgieva's time at the World Bank, which she was chief executive there. The World Bank puts out something called a Doing Business report, and the essential finding from this report that the World Bank commissioned was that Georgieva used her influence to help inflate the rankings for China in response to pressure from China. Now, of course, she rejects that. She says it's not the case. She has informed the IMF board and will apparently address the IMF staff on this issue Friday. But it's kind of issue whereby it will draw political tensions, attention in Washington, D.C. It will bring scrutiny on the IMF, and it certainly is one of those issues that will need close watching from here in terms of to see how it does develop and whether it does morph into the kind of issue that does put more pressure on Georgieva in her role as MD of the IMF.
Right. Ender, what has the political reaction been so far? You're right to point out that the focus presumably should be on what's happening in the US and the reaction there.
Indeed. Well, we've already had some Republican lawmakers coming out, Tom, and they are seizing on this. They're making the point that, in other words, it's a pretty concerning finding from this report about Georgieva's actions. They're calling for more scrutiny in terms of what was going on. And remember, there's plenty of skepticism among U.S. lawmakers about the IMF in the first instance. The Treasury Department themselves have also said, of course, they're looking into this report, which is something of a mechanical response for them. The report does say, though, does go out of its way to exonerate Chinese officials of exerting any undue influence. It's not accusing them of doing any wrongdoing. It's saying the pressure and influence all came from within the World Bank side of things. So I think this is something of a political hot potato, Tom. These things do come and go. Multilateral institutions do have clashes with governments like China and the US from time to time, but this is certainly one to keep an eye on to see where it does develop and where it does go from here.
Yeah, certainly the one to watch around the controversy circulating around the IMF's chief and how this unfolds from here. Bloomberg's Enda Curran, thank you very much indeed, joining us from Hong Kong. Okay, coming up, UK retail sales fall unexpectedly for a fourth consecutive month. That's the worst stretch of declines since at least 1996. We get back to the markets next. This is Bloomberg.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
What we all missed a little bit in the whole election campaign is a clear outline of European and German growth agenda for 2030.
At the moment we have a coalition, we need to have a plan for the next 10 years on how they're going to be as successful as we used to be.
We have to strengthen the EU's competitive position and to use also all the funds that have been set up now in order to cope with COVID and to recover.
We can only be competitive also here in Europe if we also transform our industries.
Some key voices from German industry and business there. And for more on the upcoming election in Germany, you can watch our special program, Germany Decides CEO Briefing. That is on Bloomberg.com and on YouTube. Okay, let's get back to the markets then. Joining us now is Noor Al-Ali from our Markets Live team. Noor, I want to start with the UK retail sales print. So 4 straight months now of falling retail sales here in the UK. How is the read-through to the markets being felt?
Good morning, Tom, and thank you for having me. Well, look, realistically, this is not a really good picture for retail sales, right? But if you want to think about it in layman's terms, this could instigate a pivot to people actually spending in restaurants, because one caveat to add here is that these figures don't actually give you restaurant spending. So the sun has been out in the UK, it's been the summer, this has been our first summer since the lockdown, as things have reopened. So I would expect things to move towards more people going from goods to just wanting to have a good time.
Okay, so that's the silver lining to some data that, at least on the surface, looks very negative. But you're right to point out that the nuances there. Where does this leave the question for the BOE then? Because we've seen those inflation rates running higher. We heard Paul French talking to us earlier saying that he expects inflation to be relatively sustained here in the UK. How are things lining up for the Bank of England?
So realistically, the things that we need to look out for when it comes to the Bank of England next week, because they are coming out with their rate decision, is first of all, you've got the public spending figures and the fiscal data coming out 2 days before that. So that could give you a good overview, or even a better overview, of how the economy is at the moment. But realistically, the one thing that I would want to see, and I think the Bank of England would want to see as well, is how the economy recovers after the furlough scheme has been winded down. And that's coming to an end very soon. And so I think realistically, we're looking at a very subdued reaction until we see how the market and how the economy reacts to no more aid from the government when it comes to paychecks.
Okay, Noor, I'm sure you can do this, folding the central bank action into the precious metal space. I'm looking at 3 days for gold, and you're down 2.54%. The yellow metal is up in today's session. But the picture over the last few days has been one of negativity for precious metals. What's going on there?
Well, actually, gold is headed for its second weekly decline. I mean, if we close at a negative today. And the thing to keep in mind here is gold is very strongly correlated with the dollar and the 10-year. I was just running some regressional analysis to make sure that this checks out. And you could see a very strong correlational relationship between the dollar and the Treasury's 10-year notes. Now, why does this matter realistically when it comes to central bank policy? Because the tapering timeline from the Fed is heavily weighed, and you can see the reaction almost instantly in yields and in the dollar. So, if one goes down, the other goes up, and vice versa. And so gold...
Good morning, traders. Hope you're doing okay and ready to trade. I'm placing an order to buy euro, and I'm going to place an order at 117.73. Okay? The order placed to buy euro at 117.73. Okay? Stay with me. If you want to copy this trade, please do so. And we will close this trade with profit. I'll let you know what's going to happen after we will get filled this order. Okay, position opened at 117.73. As soon as it will move higher, we will place stop on profit. So if it will change direction, we will not lose any money, and we'll close in profit. You still have time to get euro because it moved down. Okay, I'll speak to you later.
At the top of the list, you've got consumer, retail, and travel and leisure on the back of some reports from the Times that the UK is going to be easing up on its border restrictions and the red list. Plenty more ahead. This is Bloomberg.
if you look at China, if you look at U.S. taxes, how much time do you spend figuring out these big overarching themes as opposed to what happens with inflation?
There's an awful lot going on at the moment, as you say, and clearly some of the big debates at the moment are the slowing global growth picture, which we're seeing everywhere. And we're also seeing that at a time when inflation is rising and is proving pretty sticky. And to your earlier points, Francine, essentially the interplay between those two is critical. So some of those news events this week, whether it's OPEC and what's happening from a supply perspective, is going to be crucial, or indeed, of course, that US CPI print. So we've spent a lot of time thinking about inflation more recently, because clearly that leads into when we feel you may start to see the taper and when you might start to see rates going back up, particularly in the US. I mean, what might be useful just to explain a little bit is the focus that we've seen from everybody on China. You know, clearly China, huge in terms of the global commodity cycle.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
I'm not worried about blackouts, but I'm worried about the competitiveness of certain sectors that are really dependent on energy prices.
Our current view is that it will not begin to get better until at least into the middle part of next year, and it's still very fluid.
We think demand is recovering, but there's been a paradigm shift to online.
This is Bloomberg Surveillance, Early Edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. China's nightmare Evergrande scenario is an uncontrolled crash, while Beijing faces pressure to intervene amid signs of contagion. UK retail sales fall unexpectedly for the fourth month in a row. This is a worst stretch for British shops since the mid-90s. And we speak to the chief executive of the world's first venture capital fund that prioritizes underrepresented entrepreneurs. Eric Collins from ImpactX joins us later in the program. Please send us your questions on IB Plus TV Go or on Twitter. First thing is first, let's check on the markets. Now, we did see a sell-off over the last 4 to 5 days. Yesterday, it wasn't too bad, so we finished off the day in the green for a lot of these stocks in the U.S. And today, look, we're getting a nice little lift at 0.6%. I need to warn you, it is triple witching. Now, this comes around, of course, every quarter. It usually triggers volatility, so just watch out for any kind of unwarranted volatility, or sometimes the markets, especially around 1, 2 p.m. London time, are a little bit funnier than usual. Iron ore, this is a big one. 102, if it touches 100, could actually spur a little bit of movement on commodities. Overall, this is part of the China story, so we'll look at Evergrande and overall some of the cyclical stories that we've seen out there. Right, let's look at the individual maps. When you look at the UK, the FTSE, the CAC, and all of that, because it gives us usually a good picture of what exactly is moving the markets. Retail and travel companies leading some of the gains. In Europe, you can see the CAC 40, 1.1% higher. Again, we'll spend a bit of time talking about that submarine deal. The DAX over in Italy, the MIB and the UK, probably gaining as much as 0.4, 0.5%. So they're seeing very similar patterns. The economy, still one of the biggest concerns. And then, of course, we have that retail data out of the UK that could hurt in the longer term some of the retailers that are in the FTSE. Not so. Retail today, gaining 1.5% amongst the biggest gainers. So is travel and leisure and technology. Look, there's one lonely commodities group that's actually down, with basic resources down some 1.3%. Now let's get straight to our top stories. Market story, and it's probably commodities with MLive's Eddie van der Velde. So Eddie, I know you're looking at energy prices. We're looking at iron ore prices. What are we expecting from them?
Yeah,
Look, energy prices and just commodities in general have been really in focus over the last few months, really. Those energy prices in Europe, they have really rallied. And there's a whole confluence of factors that are driving them higher, from, hurricanes in the US to low wind speeds in Europe. But really, there is whenever a commodity goes parabolic, like we're seeing here, there is a risk of a significant pullback. And at the moment, what we're seeing is demand destruction in the energy market. In iron ore, on the other hand, we're seeing China trying to pull back some of its more polluting industries, and that's limiting steel demand, which is limiting the demand for iron ore. So two very different stories, but it just shows that in this commodity super cycle, you really want to back the right horses.
You certainly do. Now, iron ore, right, close to falling below $100. What happens at $100?
So we could see, we could see a bit of a further pullback. The miners in particularly have done really well on higher iron ore prices. The producers of steel, that they are looking for lower prices. There could be some follow-through selling at $100, but these are very fundamentally driven markets. I wouldn't put too much weight on the technicals.
Eddie, thanks so much. I'm Live's Eddie van der Veld there with the very latest on the markets. Now, Beijing is facing increasing pressure to intervene amid signs of increasing Evergrande contagion risks. This is as a crisis facing the company is actually fueling concerns over the nation's real estate and credit markets. Well, the PBOC has injected $13.9 billion of short-term cash into the financial system to soothe market nerves. Joining us now is Bloomberg's China credit reporter, Rebecca Chung-Wilkins. Rebecca, thank you for joining us. Could this be China's Lehman moment?
Well, that's certainly what folks are trying to examine here. I think the kind of critical difference is that, of course, Evergrande is a property firm. It does have a significant chunk of kind of assets behind it. And on the other hand, Chinese authorities do have quite a bit of room here to move. And in terms of move to save the firm, to kind of negotiate a potential smooth way out. And of course, their priority will be to cut down on any chance of triggering systemic risk across the broader financial markets.
So, Rebecca, what does it, the Chinese authorities, I imagine now, are looking at worst case scenario and best case scenario. Like, what's being said in the corridors of power?
Well, I think the whole dilemma here for Chinese authorities is around moral hazard. So Chinese authorities have moved very quickly this year to kind of clamp down and to introduce a more market-led approach to risk by allowing things like a record number of defaults and, of course, that very protracted resolution at Huarong earlier this year. I think the worst-case scenario would be somewhere where we saw the kind of social unrest element still spreading across the broader nation, and of course, like some of those smaller banks really being roiled because of their exposure to Evergrande and the difficulty for those smaller banks to kind of take a hit.
Rebecca, thank you so much. Rebecca Chung-Wilkins there with the very latest on some of these things that we're watching in Chinese markets and, of course, the impact it could have across the board on systemic risks. Now, Smart Conversations continue on Bloomberg Surveillance Early Edition. Later on in the program, we speak to the chief executive of the world's first venture capital fund that prioritizes underrepresented entrepreneurs. Well, Eric Collins from ImpactX joins us this hour. You can send your questions on IB plus TV Go or just tweet me. This is Bloomberg.
About your experience as a young woman and as a woman working in this sector, and of course having that amount of scrutiny and public attention on you. South Korea doesn't have a very good record when it comes to gender relations, the wage gap, treatment of women. Did you have a personal experience of that deficit?
I was in a mechanical engineering department for 10 years for my undergrad and PhD. Of course, I was just 2 girls among the 120 classmates in the mechanical engineering department. And then at the time, our workshop building, we even didn't have a female bathroom. So when I watched the Hidden Figures, that was so sympathizing with my experience because I should go all the way to the campus to go to the female bathroom out of the building. But I really want to see the tendency of the development rather than the current status.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, let's get straight to the Bloomberg First Word News. Here's Laura Wright. Hi, Laura.
Hi, Francine. Italy is to require all workers to have a valid COVID passport, the toughest vaccination requirements in Europe. The so-called green pass, showing vaccination, past infection, or a recent negative test, marks a victory for Prime Minister Mario Draghi in the face of opposition from right-wing parties. From October 15th, staff and companies face fines of as much as €1,500 for non-compliance. IMF chief Kristalina Georgieva says she fundamentally disagrees with the finding of a report that she had applied pressure on World Bank staff to boost China's ranking in an economic report when she worked there. She's accused of putting undue pressure on bank staff to adjust China's rating in the Doing Business report when she was chief executive. The report became so controversial that the World Bank announced it will stop producing it. Beijing has applied to join an Asia-Pacific trade pact once heralded by the US as a way to isolate China in the region. China made a formal application to join the CPTPP on Thursday. The US pulled out of the deal in 2017 under President Trump. The UK has also signaled it wishes to join the pact. New members need the agreement of all 11 existing nations. President Joe Biden's vaccine booster plan faces the first of 2 crucial tests today when FDA advisors meet to discuss them. The White House would like to begin offering boosters to almost all vaccinated adults starting next week. But some health experts caution the administration is rushing ahead without enough data and regulatory oversight. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg, Francine.
Laura, thanks so much. Now, with contagion risks from the Evergrande crisis and concern over growth in China, investors are becoming increasingly wary about the world's second largest economy. Our next guest says now is not the time to be adding exposure to China. Well, let's welcome Janet Moy. She is, of course, investment director at Brewin Dolphin. Janet, we're lucky to have you, especially on a day like today where we really try and understand the consequences of what's happening with Evergrande. Is this the Lehman Brothers moment for China?
Good morning, Francine. Thanks for having me. Well, I don't think this is going to be a Lehman moment for China. This is just one individual company. And of course, there's a concern of the spillover impact for the industry. But I think if this is managed well, I think it should avoid a widespread threat to the sentiment in the Chinese market. And I do think that the Chinese authorities understand the implication of a widespread systemic impact. So I think this Evergrande issue will be handled very sensitively. So I doubt that this will be as systematic as the Lehman moment. And obviously, this is more of a domestic story for China, and I doubt that it will be contagious to the global economy.
So what does that tell us, Janet, about some of the choices that PBOC and other Chinese authorities have to make? Do they need to actually start intervening? I don't know what worst case scenario is, but we are seeing more signs of contagion because of Evergrande.
Yeah, primarily it is within the property sector. So the Chinese authorities, they would like to slow down the property sector. So I think that it is very hard to say. I mean, historically, investors have been assuming that Chinese government will just bail these companies out. But I think no longer that will be the case. No longer you can implicitly assume that the Chinese government will bail them out. So I think this issue would be confined within the property sector, which is as investors already kind of assuming a slowdown. And I think the Chinese government will try to avoid that being spilled over to the other parts of the economy. So I think that the authorities will try to make it clear and try to provide the less necessary liquidity in such an event in case the market are starting to see some spillover. So I think that the risk should be relatively contained, but of course it is still pretty much up in the air because it is still not clear what the Chinese authorities are going to do about it.
So, Janet, what does this all mean for investors? Like, what should I do if I have exposure to China right now?
Yeah, so I think the implication is that you have to be very cautious in investing in China. There are just so many issues at the moment, and we should expect continued near-term volatility. Well, we just don't have this uncertainty on the Evergrande situation, and we also have the uncertainty on the regulatory crackdown. It doesn't seem to end, and there's also this slowdown concern in China. So I think all these adding up together, you got to be pretty cautious in your investment strategy in China.
Cautious, Janet, in terms of just trying to figure out what happens next in terms of crackdown or regulation, or actually maybe even possibly, pulling some money out in the sideline until we have a clearer picture of what's going on.
Yes, I think a lot of the debate is whether you should, sell out of China or you should add more at this stage. I think either decision is very difficult because, overall speaking, China is still a very, very dominant player in the world economy and is expected to grow very, very well in the next decade or so, driven by the domestic consumer story. So it's unclear whether you should let go of all of these potential opportunities in the long term if you're a long-term investor, right? So another consideration whether you should be adding positions at these kind of valuations. And it is very difficult because historically you would expect to have a pretty good return if you buy these valuations. But I think you have to add a bit more consideration in the risk implications. So we're still not sure whether these valuations are attractive enough for people to buy into the market. So I think, if you're holding on to your China position, it is very tricky to whether you decide to sell out or you add. So I think the right decision potentially is to just hold and see how it goes before you make that important decision.
Janet, there's, the other big story, of course, is iron ore. What do you do with commodity-rich stocks right now with that industry group?
Yeah, so commodities, we think that it's probably had its peak moment, basically because we had a very strong rally in a lot of the industrial commodity prices, primarily because of the resurgence in demand in the global economy, first driven by China and then the rest of the world. But now the China bit is definitely waning, in particular in the property sector. That is a very important demand. And also we think that according to the indicators that we're seeing, growth is slowing at the moment. So I think a lot of that catalyst.
I think we've just had a video problem, actually. Sometimes these things happen. It's very 2021. But actually, next time we'll also try and get Janet here in the studio to talk more about commodities. She was making some very interesting points on how the Chinese authorities and governments are now looking at some of the risks out there. I don't know if Janet's back. We may go to Janet Moix.
Yes, I'm back.
Janet, you were just cut off and you were, giving us your latest thoughts on iron ore. In 20 seconds, is now the time to just sit on the sidelines?
Yeah, we feel that the commodity complex has probably seen its strongest catalyst a couple of months ago, and we don't think that it's going to be repeated in the next couple of months. So I feel that the cyclical areas of the stock market is likely to underperform the growth areas of the market.
Janet, thank you so much. Janet Moy there, investment director at Bruin Dolphin, also navigating some of these technical issues with great aplomb. Now, coming up, the rise of the influencers, where those on social media platforms such as TikTok offer a variety of advice on insights on personal finance. We talk about the finfluencers, the financial influencers. It's a really fun story. They can also earn up to $500,000. More in today's Big Take up next. This is Bloomberg.
The growth story in cannabis remains very strong, even after the sort of loosening of the pandemic. There was a worry that there might be wallet spend competition, but so far the cannabis sector seems to be holding up very strong.
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacroix here in London. Now, Bloomberg's big take today is on so-called finfluencers. That's financial influencers. Now, these are the teens and 20-somethings who can steer online conversations about life hacks, beauty products, Hollywood blockbusters, and they're now blazing into their American finance. Now, the finfluencers have apparently climbed up the ranks to become some of the most sought-out content creators on the internet. Well, for more, we're joined by Bloomberg's Charlie Wells. Charlie, I'm obsessed with the story. I know the readers are. Social media, they just want to know more. So basically, I'm probably told to be a finfluencer, but this is someone who's cool. All right, let's become finfluencers. And basically, you get paid by a bank. You can make up to $500,000 by doing what?
Yeah, so basically this is a confluence of two big trends. Yeah. So it is influencers, which we've of course seen for many years now. So people at restaurants promoting a restaurant on Instagram, at hotels promoting a hotel, and retail trading. So the exuberance about retail trading right now. What these finfluencers do is they make sort of educational, sort of advertorial content that asset managers like Betterment or Wealthfront want to plug their products.
So it's not necessarily funny.
Not always. I mean, it can be educational. I think when it's both is where it really hits the sweet spot. And that's hard to do because the conventional wisdom in financial advising, of course, is that financial advice should be boring, not exciting.
Unless it's Bloomberg surveillance, because we're so exciting.
Yes.
So this is not traditional advertising because actually we don't want to see boring dépliants and boring stuff, right? It's the interaction. So I guess it's the personality also.
It's very personality driven, and there are certainly some personalities in this space. So we have a woman called Mrs. Dow Jones, who's very funny but also educational, and she will teach people about Bitcoin by comparing the asset to the relationship between Ben Affleck and Jennifer Lopez, or
Just too good.
It's too good, or Billie Eilish's rise to fame to teach about compound interest.
Okay, is there a danger for big financial firms that some of the stuff is not true?
Great question.
They say, but it's fine. So is it meant to be lighthearted, or is it actually investment advice?
Yeah, so this is risky because, what attracts attention on social media is not necessarily good financial advice. And so there is a reputation management element here. And what was really striking when our team spoke with these big firms was that they review the scripts and they have their lawyers review these scripts to try to mitigate that risk.
I mean, it's so funny. I mean, I remember, so there was someone who was talking about hedging, and then, the famous couples, celebrity couples that talk about NFTs.
Yeah.
Like, we should do that.
We should do
it right now.
We'd be hit.
Do they bring people with them? So, they're funny. They have, 100,000 followers, 1 million followers. But do people then sign up for these financial services?
That is what's really striking. And so, one day Betterment saw 10,000 people sign up for a service, and they were asking, what is this all about? And it was coming from a influencer.
I mean, it's just amazing. How many people actually earn £500,000 doing this?
Yeah, it's a few people right now. So it's early days, and some of these early movers are making a lot. So one of the guys that we talked to in the story makes about $8,000 for a single post on some of these platforms. But he's an early mover. And so, as more people enter the space, that figure could go down.
All right. I love that. Charlie and I work so hard in our social media accounts.
We try.
Also, just follow us as well, right?
Please
we're
do.
both on Instagram and we're both on Twitter.
She's better than I am.
Not really. Charlie Wells. We'll give some content for TikTok next. Charlie Wells joining us there from A Quick Take. Now, remember, you can also read today's Big Take in full on Bloomberg.com and on NI Big Take on your Bloomberg terminal. And actually, Charlie and I will also put it on social media for you. There you go. On Instagram. Smart conversations continue on Bloomberg Surveillance Early Edition. Later on in the program, we also speak to the chief executive of the world's first venture capital fund that prioritizes underrepresented entrepreneurs. Eric Collins from Impact X joins us this hour. Send your questions to him. We're going to talk about biases. We're going to talk about some of the wonderful things that they've been supporting, including Marshmallow, one of the first, actually, unicorns here in the UK in that space. So you can IB plus TV Go. You can also use Twitter. And we're also on Instagram, so we're reachable in many different ways. This is Bloomberg.
We didn't want our story to be ended by Taliban. We wanted to continue the path that we started, to continue to go for our achievements and to go for having our dreams to reality. So that's why we decided to leave Afghanistan and go for somewhere safe. We are concerned that what will happen to our home then. Many people are leaving, but there are still girls who have dreams. There are still people who have dreams, and we want countries around the world to help Afghanistan to have peace over there so that the girls over there can have the opportunities to continue their path as well.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
Now, China's nightmare Evergrande scenario is an uncontrolled crash. Beijing faces pressure to intervene amid signs of contagion. UK retail sales fall unexpectedly for the fourth month in a row. This is the worst stretch for British shops since the mid-90s. And we speak to the chief executive of the world's first venture capital fund that prioritizes underrepresented entrepreneurs. Eric Collins from ImpactX joins us later in the program. Send your questions on IB Plus TV. Go. Now, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I feel like we've just about made it to Friday. It's been a long week for everyone, especially those on the markets. I'm Francine Lacqua here in London. Now, there's a little over a week to go until Germany heads to the polls, and leading candidates Olaf Scholz and Armin Laschet are intensifying their campaigns. Now, the latest polling shows the CDU is finally closing the gap with the main rivals, the SPD. Our European correspondent, Maria Tadeo, is here with the very latest. Maria, I feel like the race is so open because of the margin of errors. I mean, what will be the deciding factor in the end?
Yes, and Francine, you make a great point, and every time I speak to a pollster in Germany, they say this. The margin of error is very key in an election like this. 5 points, 4 points, an election when everyone polls 25 to 18 on that range can really change everything. And then we had this poll today, the CDU polling 22%. This is the best they've had in a month. It does seem that it is narrowing that gap, and that could really change things. In terms of the deciding factor, it's very hard to see a single issue in the election. We know that the economy is big. We know that climate is big. We also know that personalities in this one are actually playing a big role. But to me, I spoke to someone from the CDU this morning, and he said, in the end, we could still win it because Germany is not Berlin. It's not hipster. It's not cool. This is still a conservative country. It's still a Christian country, and we really like cars.
I thought everyone was a hipster nowadays. I'm so shocked. That's the real breaking news this morning on Bloomberg TV. Talk to me a little bit about coalitions, right? So how difficult, if we don't really know or believe the polls but not 100% trust them because of the margin of error, then we're going to build coalitions, which is going to be mind-blowing. Anything could happen almost. What's priced in the markets?
Yes, and two parties is a mess. Can you imagine if you have to bring in three that really go all the way in the political spectrum?
And in Italy, it's even more.
Then it's even more of a mess, exactly. And that's what everyone tells me in Germany. This is not just about the election, which is wide open, but also the coalitions after. And it's September 27, when we're really going to see that this is going to be very, very difficult for the next chancellor to keep everyone in check. The flip side, however, a lot of people tell me, you know, we're not going to see that radical change because ultimately when you have to bring in so many different factions together, it's all about the compromise. So perhaps some of the most kind of out there proposals from the Greens, but also the Liberals, maybe the CDU, they could still try to form a coalition. That's also, I'm always reminded of, it's happened in German history. Even if they don't win, they could still try to form one because they're so tight and everyone is polling very similarly. So it's a coalition that will be a big, big mess. I'm told the talks will only get serious by Christmas, and we're lucky if by the start of next year, around February, we have a government.
All right, we're going to talk a lot about Germany then. Maria, thank you so much. Maria Tadeo there here in London for us. Now, for more on the upcoming election, you can also watch our special program. It was a success. Germany Decides, the chief executive briefing. You can find it on Bloomberg.com and on YouTube. Now, we speak to some of Germany's highest profile business leaders, including the chief executive of Deutsche Bank, for a whole hour. Now, let's get a check on how the markets are shaping up with Bloomberg's Ritika Gupta. Ritika, so what are you watching today? Yeah, Francine, seems over here in Europe, it's another day of gains. We're up some 0.5% on the stock 600. Over in the US, pretty much flat, just tilting to the downside. Yesterday, we struggled to hold on to some of those gains despite a positive CPI print there. But let's brace ourselves for a bit more volatility today because it is quadruple riching. That is the exploration of futures and options taking place. And then I point to our 10-year yield sitting at 1.33%. And of course, Francine, I've got to talk about iron ore. No respite for them again. Down in that Singapore session, some 4.6% there, really hitting our miners over here. Yeah, so let's focus also, Rick, on the UK and the missing retail sales. What is this telling us about the UK consumer? Yeah, Francine, a downward surprise here for retail sales in the UK for the month of August, down some 0.9%. The expectation was that we would be up 0.5%. This really was meant to be the UK consumer coming back, getting out there, spending back to school, back to work. But really, it feels like the coronavirus is still dampening demand. 4 straight months here of declines and really falling across the major categories too. But I will point out one thing which is important is that it doesn't include restaurants. And so it could be that it's a kind of a shift in consumer preferences, less spending on clothes and more spending on going out and having a good time. But Francine, it's important and interesting to compare it to the US, where we saw really it was that consumer driving those retail sales higher. Again, this idea of back to school, back to work, something that's not really taking place over here in the UK, it would seem. Francine. Ritika, thanks so much. Ritika Gupta there with the very latest on the markets in the UK. Now, Smart Conversations continue right here on Bloomberg Surveillance Early Edition. Up next, we speak to the chief executive of one of the world's first venture capital funds that prioritize underrepresented entrepreneurs, where Eric Collins from ImpactX joins us this hour. Send your questions on IB plus TV Go. This is Bloomberg.
From New York City.
We're here in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai. Good morning, everyone.
Have a great evening.
This is Bloomberg Daybreak with Lee.
Balance of Power on Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology.
And this is Bloomberg Green.
To recap the headlines.
You do not want to miss this story.
Really good news on the jobless claims front.
How are you thinking about those dynamics?
I think what we've seen during this period of time is that communicating via video is not a fad. We are using it in all aspects of our lives, for work, for learning, for communicating, for staying in touch.
That's the promise presidential candidate Joe Biden made to voters over a year ago.
It's time to reverse the priorities in this country. It's time to help small businesses. When the federal government spends taxpayers' money, we should use it to buy American products and support American jobs.
And that's the plan President Joe Biden laid out to Congress starting last March. But from the beginning, he insisted he would not just borrow to get it done, that we had to figure out how to pay for it.
The investments I'm proposing will be fully paid for
over the long term by having the largest corporations, including the 55 corporations that paid zero federal tax last year, and the super wealthy began to pay their fair share.
And this week, we got some specifics on just what it will take to pay for what the president wants. It may not be as dramatic as the fashion statement made by Representative Alexandria Ocasio-Cortez at the Met Gala this week, but it still would be the most sweeping set of tax increases in nearly 30 years, including raising the top rate on personal taxes, increasing taxes on capital gains, and imposing a 3% surcharge on anyone making more than $5 million a year. And it's not just individuals who'd get hit. The top corporate rate would go up to 26.5%. There'd be new levies on overseas corporate income, and the carried interest break so beloved by private equity would get cut back further, applying only if you hold the asset for at least 5 years before you sell it. Not surprisingly, Democrats and Republicans see these proposals very differently, with President Biden's chief economist claiming the corporate tax changes would bring more investment onshore.
The core values the president has put forward is reverse the most negative impact of the Trump tax cuts and get this corporate tax reform right so that we are encouraging more incentives to invest here domestically.
While Republicans warn these hikes would make American industry less competitive.
They'll be crippling for Main Street businesses. Certainly they'll land on working families, but as importantly, we're going to drive U.S. jobs overseas. And this is trying to fight our way out of a pandemic. It is the biggest economic blunder I've ever seen a country make.
It's a fundamental clash of wills and of philosophies, but with a Democratic majority in both houses, it looks like we're in for a change. The question is, how big will it be?
So as you were just hearing U.S. politics on this edition of Wall Street Week, David Weston wraps up the week in the markets, the most recent U.S. inflation data, and of course the tax proposal released by House Democrats this week. Now let's get to your Bloomberg Business Flash. Here's Laura Wright. Hi, Laura.
As consolidation heats up in the American financial industry, Bloomberg understands the Japanese lender is exploring options for MUFG Union Bank, which has about 300 branches and more than $16 billion in equity capital. South Korean shipbuilder Hyundai Heavy jumped on the first day of trade in Seoul. That's after raising almost $1 billion in the nation's fifth biggest offering this year. Shares rose by as much as 125%. The shipbuilder plans to use the proceeds to fund eco-friendly vessels. Controversial British journalist Piers Morgan has signed a series of deals with Rupert Murdoch's media empire. News Corporation's News UK says Morgan will have a TV show airing in the UK, the US, and Australia, plus 2 weekly columns for the New York Post and the UK's Sun newspaper. The TV show, to be filmed in London and airing in early 2022, will be broadcast on a new UK television channel. Francine, Tom McKenzie's still making up his mind about whether he'll be tuning in. What about you?
Like you don't know. Thank you so much, Laura Wright. Now, my next guest is the chief executive of ImpactX Capital Partners, a venture capital company supporting underrepresented entrepreneurs across Europe. Now, his latest investment is into digital insurer Marshmallow, which is one of the UK's first black unicorns. Now, let's discuss why investing in diverse businesses will actually help bring outsized returns. Eric Collins, great to have you on the program. We've, caught up a couple of times, and we've been following your journey. We started off with a first interview, I think, 2 years ago, and the numbers were horrific in terms of how much capital goes to BAME, founders. Has it changed? Has it gotten better?
Certainly, Francine. First of all, thank you for letting me be with you today and talk about this issue. What we found is that there are lots of lip service has gone to making investments in underrepresented entrepreneurs. And underrepresented might be women who receive very little funding, and then people of color who receive very little funding. That's around the world. In the UK, that is particularly difficult. When we look at the numbers are less than 2.9% of funding goes to women-led ventures, and less than 0.2% goes to black-led ventures. So there's a lot of opportunity for upside in terms of investing more. What we have noted in terms of...
Okay, traders, let's place stop for euro. I'm going to place at 117.78.3. Okay, I'm placing a stop at 117.78 even, yep, like this. Okay, it will give us 5 pips in profit. Okay, guys, so if you copied our trade, if you follow me from the start, please do so. Please place stop. In this case, you will not lose any money at all. This is day trading. We're not falling in love with stocks we're trading, so or securities. So please place your stop. Stay safe. Okay, guys, position closed on euro, just right here. I'll show you where we made 500 pounds. Well done, guys. All of you who followed the trade and made a profit already. So this is great. Let's move on. This is the morning in United Kingdom, so let's not concentrate on one winning. I'll speak to you later. I'll let you know if we'll have and when we'll have other good chance and opportunity to make profit from Forex. Okay? Stay safe.
So if there's one thing that would make a big difference, what is it?
You know what would make a big difference? For asset allocators to say to fund managers, I want you to invest. I want to see the returns that are coming, because we know diverse teams of founders actually create a premium in terms of outcomes. They actually sell at about a 30% premium when they exit. We would like to see people following the logic and then taking that logic and saying, this is where we should be investing because we're going to get substantial returns and fulfill our fiduciary responsibility. That's what I'd like to see. And then I'd like to see fund managers actually breaking outside of their usual search images and saying that there are ways that we can find organizations just like the World Remit, just like Marshmallow, and we're going to get those sort of outsized returns because underrepresented people will deliver outsized returns, just like other entrepreneurs.
Eric, thank you so much for coming on today. Eric Collins, Chief Executive of ImpactX. Now, from supermodel to e-commerce, up next, we also hear our conversation with Miranda Kerr, Cora Organics founder, about sustainability ahead of COP26. This is Bloomberg.
Lots happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
I support the new framework.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
For me, I really feel like it's not just about building a brand for profit. I want to really help educate people and spread the message of self-care, investing in your health, because I really believe strongly that health is wealth. And Cora Organics is really about providing people with healthy, affordable skincare products that give you those results that you need. And my hope is that one day we can become the Estee Lauder of organics, and I can pass the company down to my beautiful children, and the company can hopefully outlive me.
What's the best piece of advice you've ever gotten as a businesswoman? And, you know, was there a particularly tough day or a moment where you had to call someone up, a chief executive, and say, how do I deal with this?
Well, my husband is someone that I bounce ideas off and all the time. And he's the one that really just said to me, why are you out there focusing on growing other people's companies, like with modeling and whatnot? Why aren't you focusing on your own company? And I said to him, because that requires more money from me. The other companies, I'm actually making money. And he's like, well, you actually need to get the products out there. You need to be able to invest more money so that people can then see your products and see the incredible results that they're giving, and get those results firsthand. So I'm not sure, like, well, why you're so afraid, because you have an incredible company with incredible products and you just have to go for it. And it was his belief in me that really empowered me to go for it and take that leap of faith. And it was scary, and it's been incredible to see the growth once I've actually done that and put my all into it.
What have you learned during the pandemic? Do we shop differently? Have you had to adapt some of your business models?
Yeah, in the beginning, we had to quickly pivot our strategy to e-commerce, as a lot of the brick and mortar stores were closed. And we've seen more consumers and customers shopping on coraorganics.com and on our .com retailers. And everyone, even to today, is very focused on the .com business. And Cora.com business in 2020 was actually up 75% year on year in North America. And, you know, I just feel like also the current sales split is like 40% on Cora.com and 60% with our retail partners. So it's definitely more online, but the stores are slowly opening up.
Rhonda Kerr there of Cora Organics. More Bloomberg Surveillance Early Edition continues in the next hour.
There is just a lot of demand right now for products, whether those be items for our home office or for backyard entertainment. This has been a consistent issue for the past year or so throughout various lockdowns. The global supply chain is made up of ships and trains and trucks, and it's designed for predictable patterns of demand, which is the exact opposite of what we have right now. A lot of uncertainty about whether certain economies are going to be open or closed based on the outbreaks that they're having. So we're just seeing a lot of confusion, a lot of chaos, and a lot of uncertainty disrupt the whole system. The auto industry is very reliant on semiconductors, these memory chips that are in basically everything we buy that has sort of an electronic component to it. And they come from certain economies in Asia, like Taiwan, where they're having trouble meeting the demand. the supply chain issues are going to be around as long as you think the virus is going to be around. First or second quarter of 2022 is when a lot of people see the normalizing of all the shipping and transportation disruptions that we're seeing. But if they don't, we might be dealing with this for another year or two or three.
Global markets never sleep, so stay connected with Francine Lacqua in London, Matt Miller in Berlin, and Kaylee Lyons in New York. Perspective on the day ahead. Bloomberg Surveillance, Early Edition. Weekday mornings on Bloomberg Television.
Bloomberg has enhanced search on the terminal to deliver what you need when you need it. Now, you can simply type phrases in everyday English in the command line. Compare financials. Find people. Analyze markets. You can enter phrases or ask questions. What do you want to know today? Ask a question or visit SearchGo to find answers now.
This is a market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
We're going to continue with an economy where the overwhelming share of the benefits go to big corporations and the very wealthy? Or are we going to take this moment right now to set this country on a new path?
I think the infrastructure bill and the bigger budget is good for the economy, but not particularly great for the stock market.
I'm actually quite positive on U.S. growth, especially in the fourth quarter.
This is Bloomberg Surveillance, Early Edition, with Francine Lacqua, Matt Miller, and Kaylee Lyons.
Well, it's 10 a.m. here in London, 11 a.m. Berlin, 5 a.m. in New York, and 5 p.m. in Hong Kong on this Friday, September 17th. Our top stories today. Discord amongst the Democrats. President Biden turns up the heat on members of his own party who are balking at his tax and spending plans. China tries to soothe nervous investors. It's injecting $14 billion of short-term cash to ease concerns about Evergrande's debt crisis. And ETFs may be Invesco's future. The active investment management firm is said to be in a merger talk with a State Street subsidiary. So we have a lot going on, a lot of concern, Kelly, of what's happening in China, and I guess authorities will have to decide whether they step in aggressively or actually see it play out. And then on top of that, we could have volatility because it's Triple Witching Day. Happy Friday, Triple Witching Day.
Happy Friday, but beware of the witching. To your point, Francine, there are concerns still about Evergrande in Asia, but that aside, we did see a positive session in Asia overnight. Stocks really higher across the board, including in Japan, China, and Hong Kong. Even Chinese tech stocks actually rose on the day. The Hang Seng Tech Index up about 3.5%, snapping a 4-day losing streak. Now, part of that is, as Francine alluded to, the PBOC injecting $14 billion of short-term liquidity into the market, really trying to ease some concern around China Evergrande, which seems to be getting closer and closer to default. Still, there is risk of contagion, and investors seem to be pricing that in that Chinese high-yield dollar bonds have hit their lowest price since all the way back in 2012. Now, in other asset classes, I would continue to point to iron ore futures in Singapore, down for an 8th day in a row. That is the longest losing streak since January of 2016. We're getting very dangerously close to breaking through $100. And finally, the Japanese yen, the lone underperformer against the dollar in the G10 space today, weaker by about 0.25%. Now, here in the U.S., we've seen equities struggling to gain traction really for the last 2 weeks, and today seems no different. Futures have been fluctuating between positive and negative territory. Right now, we're basically flat on S&P E-minis. Not a lot of movement in the bond market either. We go nowhere on the U.S. 10-year yield. We're sitting right at 133. It is a slightly weaker dollar today, and then I just wanted to point to crude. Of course, WTI has had quite a run. It is actually still higher for the 4th week in a row, although it is fractionally lower to end this week on this Friday, down about 0.6%, trading at $72.15 a barrel, Francine.
Kaylee, this is a picture in Europe. Now, there are a couple of stories that I want to draw your attention to. First of all, a pressure, of course, from some of the commodities, and that's filtering through, for example, some of the FTSE MIB companies. So we're still in the green, gaining some 0.4%, but we're not gaining as much on the FTSE. Then, for example, we are on the FTSE MIB, which is much more skewed towards retail, much more skewed for the moment in terms of luxury. The CAC 40 also luxury rich. So the story over in the CAC 40, it's also this tension on submarines between the U.S., for example, and France, because of France have been left out. I don't know whether it has an implication for trade, but it could. And then it's retail travel companies leading some of the gains, the CAC gaining some 0.5%. It's really only basic resources that it's the only industry group on the lower side. And we're watching iron ore as well, Kaylee.
Yeah, we continue to watch iron ore. A lot of that seems to just be concern about China and lower steel production there, although that certainly is not where the China concerns stop. Now let's take a look at what else is ahead on this Friday. It is triple witching day for the U.S. markets. It's when the quarterly expiration of futures and options on indices and stocks occurs, potentially leading to higher volume and volatility. Also, Russia holding parliamentary elections with Vladimir Putin's ruling party expected to cement its control. And at 8:30 a.m. New York time, FDA advisors will meet to discuss whether booster shots should be offered to most Americans. Obviously something the Biden administration wants to start doing on September 20th. And speaking of the Biden administration, President Biden turning up the pressure on congressional Democrats on Thursday as discord within the party threatened to derail key pieces of his economic agenda. The president spoke at the White House.
For a long time, this economy has worked great for those at the very top. While ordinary, hardworking Americans, the people who built this country, have been basically cut out of the deal. And I've said this from the time I announced I was going to run. I believe this is a moment of potentially great change. This is our moment to deal working people back into the economy.
Anne-Marie Horder, Bloomberg Washington correspondent, joins us now from our D.C. bureau. So, Anne-Marie, September 20th is just a few days away. As we look forward to next week, what do you expect to happen?
Well, next week, a lot of these bills that went from the House into the Budget Committee will be marked up in the Senate. And this pitch from the president was as much for the American people as it was for his own party. He needs to unite the Democrats in the House, whether it's the progressives and the moderates, with the Democrats in the Senate. And we saw the president and the White House aides really do that this week. He met with moderate senators Joe Manchin and Kyrsten Sinema on Wednesday. Yesterday, he held a call between Speaker Pelosi and Leader Schumer. They said that these three will be in discussions over the next course of the next couple of weeks to make sure they can enact the president's agenda. And he outlined there why he thinks there needs to be, one, higher taxes, why the government should be trying to deal with helping prescription drug costs come down. And this was really getting at the issues that are dividing the Democratic Party right now. We'll have to wait to see what the Senate exactly marks up from the House.
Anne-Marie, good morning. So U.S. Secretary of State Anthony Blinken also speaking at a news conference yesterday following a nuclear submarine deal with Australia and the U.K. that left France out. France was furious about it.
They certainly were. And Francine, here in Washington, we also have the French embassy canceling a gala that was actually going to be commemorating a crucial battle that the French were able to help in, the Franco-American troops during the Revolutionary War. And the irony was not caught, was definitely caught by the embassy in Washington, D.C. So they canceled this gala. You also had Macron dining with Angela Merkel last night. So it does seem that Macron is trying to shore up at least German support in the Indo-Pacific. And they just seem that the French are on the back foot. They feel like they are blindsided, and they even compared this to something akin to what President Biden's predecessor, President Trump, would have done. So this is going to be very interesting because you do see the gulf really widening between Washington and Paris. Macron recently really criticizing President Biden in the withdrawal of Afghanistan. And now this is just something else that these two are arguing and debating about.
Yeah, ooh la la for the Entente. Anne-Marie, thanks so much. Anne-Marie Horder in there with the very latest from D.C. Now over to China, Beijing facing increasing pressure to intervene amid signs of increasing Evergrande contagion risks. Now the PBOC has injected $14 billion of short-term cash to soothe market nerves as a crisis facing Evergrande fuels concerns over the nation's real estate and credit markets. Well, Bloomberg's Tom McKenzie joins us with the very latest. Tom, first of all, I mean, we don't actually know how big and wide this thing is if it goes under.
Mm-hmm. I mean, the liabilities are significant. I mean, we talked about that $300 billion number in terms of the liabilities, but you've got more than 1 million homeowners, you've got the supply chains, you've got the rest of the property sector. We talked about the fact that those property stocks were under pressure yesterday. So you have the PBOC today, as you say, coming in with this $14 billion injection into the financial markets. The most, by the way, since February. There is some seasonal effects as well, because you're getting to the point where they're having regulatory checks. Also, the Chinese are going to be going off on holiday soon, so they draw down cash. So there's other factors, but certainly Evergrande is in the mix. And what you're getting now is that analysts and investors are starting to game out potential impacts of this if it becomes an implosion of Evergrande. Now, you have the likes of SocGen saying, look, this is not our base case, a Lehman Brother moment for Evergrande. Their base case is, or at least they say there is a now distinct possibility, that the impacts of Evergrande and the unraveling of this at least becomes a severe economic drag on China. RBC coming out, by the way, and saying that they think this is going to have more of an impact on the economics of China than the regulatory squeeze that we've been talking about.
Well, if it has an impact on Chinese economics, China is heavily weighted within emerging markets. So could the ripple effects of this extend even beyond the borders of Beijing's control?
Well, it absolutely could. If you look at, for example, the offshore dollar bond market, which China's real estate giants dominate, and you're seeing, of course, pressure flowing into that part of the market, absolutely. And you can't look at the Asian regional economy without looking at China, of course. But in terms of what the markets are doing, the capital markets, the Shanghai Comp is actually taking this in its stride so far. In fact, it's about 3% off 6-year highs. The yuan is relatively stable as well. So again, investors kind of testing how far the CCP is prepared to go with this. In terms of the equity markets, in terms of the yuan, relative stability, at least at this point. But that is banking on the consensus coming through in terms of a managed restructuring of this business. You only need to look back to 2015, of course, to see how the Chinese bungled the bailout of the markets, to see that it doesn't always come good. But this is one to continue to watch, of course.
Yeah, there seems to be new developments every single day. Thank you so much to Bloomberg's Tom McKenzie. Now, Invesco is in talks with State Street's asset management arm about a possible merger that would create an ETF giant. This is according to a Wall Street Journal report. And let's get more on this with Bloomberg's Danny Berger. Danny, tell us why this would be such a big deal.
A big deal, Kaylee, because it would create an ETF and passive management behemoth. We don't know exactly what the terms of this deal would look like, but we do know that the resulting tie-up would just be a massive company. And this really speaks to the ETF landscape, that in order to do well here, you need economies of scale. You need enough AUM under your belt that you can charge low fees, because competition means that you can't charge too much. People are just going to go somewhere else. So 1.5 trillion is managed by Invesco, an additional 4 trillion by State Street. So together they would have 20% of the ETF market share. Now that is huge, but it's still number 3. Vanguard and BlackRock both have more, but this allows State Street to catch up to them and really cement their place as third.
Danny, does a combined firm make sense? Are they actually complementary to each other?
It absolutely does, because they're both in the passive management business, but the types of things they bring to the table are different enough that it gives a wider portfolio of offerings. Invesco, for example, they're well known for a lot of smart beta strategies. So these are quant-like assets that are packaged up into a passive fund. State Street, their offerings, they trade a lot. Traders love them because of the easiness to get in and out of these. You think of something like SBY, the S&P 500 ETF, which is the most traded. And of course, Invesco has the Qs, the NASDAQ 100 fund. So 2 really brand name ETFs that are now going to be under the same roof, Kaylee.
All right, well, we'll wait and see if a deal does indeed get finalized. Bloomberg's Danny Berger, thank you so much. And now let's take a quick check on some stocks moving in pre-market trading here in the U.S. Your big large cap outperformer to the upside is Accelera Biologics. It's up 15%, and this is after the company confirmed that the FDA has expanded its emergency authorization of its COVID-19 antibody treatment. Another stock moving to the upside, kind of in relation to a regulator, is Lucid Motors. Of course, the EPA has just awarded its debut EV with the title of the longest range EV ever. That was reported a few days ago, and the stock looks like it will gain for a third day on that news. It's up 5.3% in pre-market trading. And one more mover to the upside is a newly public company On Holding. The running shoe company made its public debut earlier this week, popped 46% in its first day of trading, 7% yesterday, and it looks like the gains will continue for a third day, Francine. That stock up 3.6% before the bell.
Yeah, good-looking shoe as well, I think. Thank you so much, Kaylee, for some of those movers. Now, coming up, Mark Hayfele, Chief Investment Officer at UBS Global Wealth Management. He'll have a thing or two to say about China and Evergrande. We'll also talk about triple witching. At the moment, dollar steady. This is Bloomberg.
This week on Bloomberg Green, climate impacts and mitigation. Hurricane Ida has ravaged the eastern United States, and worse storms are likely to come. What can America do to adapt?
You know, it's never too late in the sense of we can always make things worse, and doing nothing will make it worse.
From rain to drought, Arizona introduces unprecedented water rations from next year. How will that impact business and agriculture?
Tires, fertilizer, mechanics, a bunch of things are going to be shrinking, so the economy is definitely going to be impacted.
And living with a changing climate. We look at the example of Rotterdam, a city at risk of sinking into the ocean.
A lot of people think it's going to cost us a lot of space and money, and we try to show that you also can use it to work on a better city.
I'm Kaylee Lyons in New York, and don't miss Bloomberg Green this weekend on TV, Quick Take, and online.
Access the financial world on demand. Hear from leading economists, policymakers, and industry experts via live and on-demand webinars, only from Bloomberg. Start exploring to see what's moving the markets. Visit Bloomberg.com/webinars.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller in Berlin with Francine Lacqua in London and Kaylee Lyons in New York. Now, I was just outside because of a fire alarm. I'm not sure if it was a false alarm or a very small fire. The fire department came and just left. It was very cold outside, and it made me think about natural gas prices, because as the weather gets colder, of course, you're going to see more demand for electricity to heat apartments and homes. We've seen natural gas prices absolutely soar. Take a look at this chart that my New York producer Daniel Curtis put together. For those of you listening on Bloomberg Radio, we welcome you, and I will just point out that what we're looking at is a new record for Dutch natural gas futures, a new record for North Asia liquid natural gas prices, and just soaring above anything we've seen in some time. Eddie Vanderwalt joins us from Bloomberg Markets Live right now to talk about this. I mean, Eddie, we're seeing ripple effects. Some factories have had to close down already. This is going to eat into margins. But it's also just a perfect storm for this commodity, and prices have nowhere to go but up.
Perfect storm in all the wrong places, because we've got the wind blowing in the US, which is affecting LNG exports, not blowing in Europe, so we've got lower production from the windmills and so on. I love that you brought in the local on that story. All news is local, right? And really that is the risk here. And if you look at that chart, you see that we had this run up in Asian LNG prices at the end of last year and a spectacular crash.
Okay, traders, I'm placing a new order to buy euro. The price I'm looking to buy, 117.76. Just right here. So if you're looking to trade again, euro against United States dollar, please place your order, copy this trade, and I'll speak to you later.
It's an energy that we use broadly. And I think that's one part of the story, that we'll see some demand destruction, and that could help cap the prices.
Eddie, if we talk about iron ore, so it's collapsing pretty brutally towards $100. If it touches $100, does it mean that actually it could go even further down? I mean, what exactly is behind it? It seems pretty brutal and quick.
Yeah, so the iron ore story is slightly removed from the rest of the commodity space. In iron ore, what we're seeing is that in China, they are trying to cut back on some of its polluting industries. That limits steel production. That reduces demand for iron ore. And iron ore is also not really part of this big commodity supercycle story, the shift to electric vehicles and to a more electrified future. So therefore, iron ore prices just coming under pressure. And this sell-off has already gone a long way. Particularly the miners, they will be hoping for some sort of floor around here.
What about some of the other industrial and base metals, Eddie?
So copper is probably the one everybody should be excited about most. I mean, look, across the commodities spectrum, we have seen supply chains being stretched. And when supply chains are as stretched as they are now, and you see an outage at a single mine, the knock-on implications are severe. That's also what we're seeing in energy. But for something like, to really get behind a rally like this and not being caught out by a massive pullback, you have to pick a commodity that is a long-term winner. And copper is absolutely crucial to that story that I was just talking about, the electrified future. You can't have an electric car without copper wire. And over the years, over 2 millennium, we've searched for all the copper that we're really going to find. There's no big resources out there that we're going to tap in the next few years. So that story is extremely bullish.
Eddie, thank you so much. Eddie van der Veld there of Bloomberg Markets Live. Now, for more analysis, some market analysis from Eddie and his team, just go to MLIV Go on your Bloomberg terminal. Coming up, we talk dollar, we talk treasuries, and of course, we talk in general about volatility. This is Bloomberg. After 16 years in power, actually, remains one of the most popular, if not the most popular, German politician ever. Who's the right person to fill those shoes?
Well, whoever is going to be filling those shoes is going to have a very hard time. Look, as the Merkel era ends, most of the certainties which we Germans, during 16 years of Merkel, tended to take as forever are evaporating before our eyes. The eternal assurance of the United States always protecting us, that's gone out with Donald Trump. The certainty that we will build an ever closer union, the EU, has gone out of the window with Brexit.
Okay guys, I've got to cancel order to buy euro. As you can see, it moved up. We need to see what's going to happen with this candlestick, so we will probably trade a little bit later. So if you wanted to trade, please cancel this order and wait for my next instruction, what I'm going to do with this pair. We're still holding Bitcoin. It's moving up, down, as you can see. As soon as it will reach necessary level, we will place stop for Bitcoin. Okay? Stay safe.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade. We did see some pressure on the yuan, we did see some pressure on the futures. That is now being reversed.
This is Bloomberg Surveillance Early Edition. I'm Francine Lachman in London, Matt Miller in Berlin, Katie Lyons in New York. Now, let's get straight to the Bloomberg. First word news, and China has applied to join the Asia-Pacific Trade Agreement the U.S. once pushed as a way to isolate Beijing. Well, Donald Trump later pulled out of the deal. The Chinese have sent a formal application to New Zealand. A number of American lawmakers have expressed concern about China's effort to join. Officials in Berlin have repeatedly warned that the Kremlin to stop cyber attacks that have intensified in the run-up to the German election. Well, two officials say the activity suggests that Russian operatives are trying to disrupt or influence the vote. The German election is seen as wide open, while Moscow has repeatedly denied meddling in other people's election. And it's the worst stretch of performances for the British retail sector in at least 25 years. Now, sales unexpectedly fell in August for the fourth month in a row, down 0.9% from July. Now, that suggests that a resurgence of coronavirus cases and supply disruptions in the UK are actually taking a toll. And we love this story. Finance firms that have struggled to reach young and new cool customers may now have had or found a solution. Call them finfluencers, so financial influencers, 20-something TikTok stars who found there's big money in being a Wall Street influencer. Now, they steer online talk about finance firms instead of beauty products and Hollywood blockbusters. Well, one claims to be making $500,000 a year and get some of his pay in company equity. I'm obsessed with the story, actually, Kaylee. So we had the reporter that wrote the story on. I mean, you could get like £8,000 just for, it's not Twitter, so it's Instagram. And what I find absolutely crazy, I mean, there's one, Mrs. Dow Jones. She kind of explains, for example, inflation through the relationship of Ben Affleck and J-Lo. I mean, I actually enjoy watching her.
Or the cost of a Birkin bag. I have followed Mrs. Dow Jones on Instagram, I think since she launched about 4 years ago. To this point, though, this has gotten just bigger and bigger as time goes on. Obviously, there is information that maybe can be gleaned from social media, but there also is the risk of misinformation, Matt, with a lot of these, perhaps you could call them unsophisticated investment advisors than giving out advice for free on the internet to millions of people.
Yeah, I would say very high risk of that. I was watching one TikTok account where a couple was explaining how they make money by buying the dip and then selling when prices rise again, as if this is a great strategy that anyone can follow and will never fail. Yeah, it's a little bit silly, I would say. But they do make a lot of money.
Yeah, but I mean, with the ones that make money because banks pay them, I was told, actually, the script, even if it's funny or silly, gets checked by lawyers. Coming up, Mark Haefele, Chief Investment Officer at UBS Global Wealth Management. We'll talk maybe influencers, finfluencers. Mark Haefele could be one. We'll talk dollar and we'll talk inflation. This is Bloomberg.
Electricity subscriptions, it's a part of this new business area that we have called the clean energy services. So the purpose for this new business area is to contribute and to create this biggest movement in the world for renewable energy. we will add even more products. We have solar panels that we sell, and now we have the electricity subscription. So it really fits that ambition that we have to, within the frame of life at home, the most important place in the world, we can add more value to our customers to live more sustainably. And this is a big part of the climate positive strategy that IKEA has for 2030, that we will remove and reduce climate emissions more than we emit in our entire value chain.
Market that over the past few weeks has made it clear it wants to go higher. It got a little spooked by the idea that geopolitical tensions are rising.
This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua in London, Matt Miller in Berlin, Kelly Lyons in New York. Matt, a lot of the focus is on gas prices. I know you have a great chart on that, and of course, iron ore today as well.
Yeah, commodities are off the hook. I mean, gas prices have been insane lately. To the upside, iron ore, huge drop to the downside. But all of this feeds into inflation in some ways or hitting margins at companies in some ways. So eventually this impacts earnings, which is another reason, I think, a second derivative effect that we need to be paying attention, Francine.
Yeah, 100%. Kaylee, this is kind of playing out on the markets too.
Yeah, well, to Matt's point, so far margins actually have largely held in there, companies being able to pass on higher input costs to their customers. But now that we're kind of out of earnings season, waiting for the next one to begin, the equity market has lost a little bit of traction. At least that's the case here in the U.S. In Europe, we are looking at a positive session on the day. The Stoxx 600 up about 0.4%. Your biggest laggard within that index, once again, is basic resources. That goes back to the kind of the metal story you two were just talking about. Here in the U.S., it's been a rough go of it for the S&P 500 over the last 2 weeks, and right now futures are in negative territory on this Friday morning. We're down about 0.1% on S&P E-minis. Of course, it is triple witching day, guys. Beware, options and futures on individual stocks and futures on indices expire today, so that could mean a lot more volume and a lot more volatility. Ahead of all of that, the VIX is at an 18 handle. And then finally, just in the bond market, really nothing to say here. Flat on the U.S. 10-year Treasury yield, sitting right at 133. Now, as for some stocks moving in pre-market trading, I do want to check on two newly public companies. Both On Holding, the shoe company, and Dutch Bros, the coffee company, made their debuts this week and had pretty warm reception from the public markets. On Holding is up 2.3%. Dutch Bros is off of its pre-market highs, but still in positive territory. Of course, Joby Aviation, also a company that debuted last month. It promises to make a fleet of commercial flying taxis. That stock is up 3.5%. And then Lucid Motors, of course, trying to make a fleet of electric cars. It got the EPA giving its sedan the longest range EV ever credential. That happened earlier this week in the stock, looking to be higher for a third day on the back of that. Right now, it's up about 5.4% in pre-market trading, Matt.
Yeah, that range record is going to continue to be broken over and over and over again as battery technology increases. Kaylee, I actually have a chart that's related to the autos industry. Here in Europe, it is the most undervalued industry group on the Stoxx 600, according to analysts. So what I'm showing our viewers, and I'll walk our radio listeners through it, thank you for joining us on London DAB Digital Radio, is that the analyst projections, the analyst consensus price target for the Stoxx 600 Autos Index is now 26% higher than the actual price on the day. So that's the most of any industry group. And it looks like it's being undervalued because of all the problems that they've had. In China, you don't know which is the next shoe to drop. You've got the chip shortage, which has, of course, hurt their ability to produce and meet demand. You've got the shift over to EVs, which is going to be incredibly expensive, and they're having to invest billions to get there. But analysts think it's worth 26% more than what you're looking at today. Joining us is Mark Heffla, Chief Investment Officer at UBS. Global Wealth Management. Mark, what do you think about this industry? I think it's emblematic of so many of the issues we're seeing across markets, across industry groups today.
Well, I think that you're definitely onto something here, and where we're spending a lot of time is looking kind of one layer down as we move into this net zero, lower carbon rush, and companies that need to produce things have to meet those targets. Who are the suppliers that really benefit in this move? Because they're probably not getting as squeezed as some of the end of the line industrial companies might be. As you just pointed out, they're not getting the valuation.
You know, the Bloomberg Commodity Index has just traded above 100. It's pulled back a little bit, but it's the first time we've ever seen it go that high. How do these commodity prices affect our outlook for inflation, for example, and margins when it comes time for earnings in just a few weeks?
Well, we've had a tremendous push up in these prices, and that means a push up in inflation. So, you know, for further inflation from here, I think, you know, we're still in the camp that largely some of this reopening inflation starts to slow down. But yeah, commodity prices can be higher, and where we're seeing that too is on the energy side, where paradoxically a push for cleaner energy, push for net zero, has meant less investment in things like coal and older power plants, and that's actually contributed to this shorter term pop in prices.
What happens, Mark, after the short term? I mean, there's also a lot of questions about, you know, the labeling of ESG, of exactly what happens in the next 3 to 4 months. If COP26 is a disappointment, do you actually look at it also through the financial lens?
Look, I think this is the most durable trend for the next 10 years because it's not just a regulatory push in Asia, in Europe, and in the United States now. It's also a desire, as you know, from consumers, you know, and companies that want to be choice employers to be on the right side of some of these issues. And so we're saying that, you know, there is this change out there, and different companies are responding in different ways. So there will be maybe the winners and losers change to a degree, but it is something you need to start thinking in when you think about your portfolio and how you construct it. It's something you need to consider now.
Mark, what happens to margins as inflation rises?
Well, as you know, that a lot of it is being currently being pushed through. And if we look at last quarter, despite all the headlines that we hear about shortages and things, we had record margins for the S&P 500. So despite the fact that we're probably past the peak in GDP growth, we actually think that the strong margins and the earnings growth are going to continue, and that the earnings estimates are still a little bit low from here.
Mark, let's talk about the Fed. September 22nd maybe is going to be a little less important than we all might have thought a month ago. What is your expectation on when we actually get the Fed taper announcement?
Well, you know, I think it's about what happens with the jobs number and if that's good, and then the COVID situation, right? So those things, and with COVID, it's a little bit about perception, but we're still expecting that we'll have some clarity and probably a start to the taper before the end of the year. But keep in mind, there's other things in flux too, such as the fiscal policy. Mm-hmm. And so we see, what we ultimately see is the Fed reacting to the entire gambit of fiscal policy, COVID, et cetera, and trying to make the taper look like paint dry.
Well, Mark, I'm so glad that you said that, because Scott Minerd over at Guggenheim put out a note last night saying the Fed is going to have to hold off on tapering because of the debt ceiling issue, because of all the drama around that and the potential market turmoil that could result from it. Do you think that kind of risk is properly priced in?
Well, it looks like a lot of market participants believe that both the Democrats and the Republicans actually see some political upside in holding those things up. So I think some of it is priced in, but as a very successful hedge fund manager told me about 20 years ago, nothing's ever really priced in until it happens. So we'll see.
Mark, I wanted to ask you about this interesting Finfluencer story we have on the terminal. I mean, it seems a little bit silly, kids on TikTok or Instagram giving financial advice, but they're making, in one case at least, more than $500,000 a year, and they're driving retail investors to trading platforms. It kind of plays into the gamification of trading, I think, in a lot of ways. How do you view today's market environment?
Well, you know, just in this segment, we're talking about flying cars, TikTok, Finfluencers. So I view it as, I'm feeling kind of old today. Thank you for that.
No.
But look, I think that one of the things that people should pay attention to is, are you invested with people who have their own skin in the game? Maybe you have to do some work to figure that out. But that doesn't seem to be the case here. And so, you know, I think it falls more on the infotainment side.
All right, Mark. Yeah, Kayla, you want to jump in?
Well, Mark, I just wanted to ask you, we seem to have a growing chorus of caution saying we're going to get a correction by year end. Do you agree with that?
Equities are an asset class with something like 15% volatility, you know, a year. So you can always get a correction. But we think that if these trends on the improving COVID situation continue and the Fed continues to be as successful as it has been with its messaging, we don't need to see that kind of a correction going into the end of the year.
All right, Mark, we'll make an influencer of you yet. So we'll push this out on social media. Mark Haefele there, Chief Investment Finfluencer, Chief Investment Officer at UBS Global Wealth Management. Coming up, there's a little over a week to go until Germany heads to the polls. Leading candidates Olaf Scholz and Armin Laschet are intensifying their campaigns. We'll get the latest next. This is Bloomberg.
如果佢唔係屬於呢個風險嘅地區咧，就全部由聽日開始咧可以恢復翻回港嘅安排啦。呢個計劃咧就將喺9月15日咧就正式推出，名額咧係深圳灣口岸同埋港珠澳大橋香港口岸每個口岸每日各1000人，咁即係話每天咧係合共有2000名非香港居民可以通過來港易咧係豁免檢疫咧係抵達香港。
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
public spending should be obviously limited. And I think we really need to come off the drug which we have seen for the last 1.5 years.
The state should do its homework, adapt the framework conditions under which innovation and success of the economy can take place. But I also think that the state should not weaken working effective fiscal rules.
In order to invest into sustainability and drive the agenda to become more carbon neutral, companies also need the money to invest. And that belongs together. And we can only be competitive also here in Europe if we also transform our industries.
Well, that was some of Germany's top executives on government spending and investment. For more on the upcoming election, you can watch our special program, Germany Decides Chief Executive Briefing, on Bloomberg.com and on YouTube, where we speak with some of Germany's biggest and highest profile business leaders. Now, joining us to talk about the election is Bloomberg's Maria Tadeo. Maria, we have quite a lot of polls. The polls are fluctuating. The margins of errors are there. So is it really all to play for?
Yeah, it's very open. And by the way, Francine, you had a great special with all the CEOs.
It was
I thought
fun.
It was great. And I thought it was interesting that all of them talked about green, but they also said we are not talking enough about Europe. And it's so true, because in every debate, there's been no questions on foreign policy. There's been no questions on what to do in the European Union. So they're very right. And I'm sure they're going to be watching the debate on Sunday, hoping maybe they'll change that. But in terms of the actual polls, yeah, go ahead.
Well, I was just going to say, in terms of the polls, we see the CDU kind of catching up here, Maria, although you found in your reporting that there's going to be a longer video released of Armin Laschet giggling during the flood disaster that Germany saw. Is that, you think, going to hurt him in the polls?
Well, you know, that's a good one, because there's a lot of rumors circulating in Berlin that there is more on Armin Laschet giggling around the floods. If you look at the impact that had on his polling, it could be really bad. It is true that everyone in Berlin that's in the political circles is waiting for this video to come out. But, you know, one of the contacts that I have at the CDU today said they feel that is done. Everyone knows it was a bad look and he left. He should not have done it. And now, if anything, the CDU is very exciting that they're narrowing that gap. You know, what they say is ultimately polls are polls, and this is still a country that's traditional, that's conservative, that's Christian, that plays into the CDU, and that loves cars, and that will be something that could resonate in the final days of campaign.
Well, Maria, to your point, polls are polls, and there's a margin of error. To what extent can they actually be trusted and reliable?
Well, the polls in Germany actually do have a history of being accurate, but you're very good to signal the margin of error here is very important. Every pollster that we'll speak to, or that we have been speaking with in Germany, says that when you poll so tight and everyone is in the range of 20, 22, 24, a margin of error of 4 points could really change everything. If you have a result where the SPD comes in at 24, the CDU comes in at 22, they could also decide, hey, we're equally legitimate, and we also want to try to form a coalition. So that means that Germany could go either way. So the margin of error is very important in this election.
So, Maria, how difficult will coalition be?
It will be
coalition building, I should say.
It will be extremely difficult, Francine, and everyone in Berlin keeps going on about this, where they say this is going to take forever to happen. We're only going to see the serious talks really happen in Christmas, and if we have a government before February, that will be a very, very good news for Germany, because to put this whole spectrum together, to bring in what is potentially a three-way coalition, it's always a mess when you have two different parties. Imagine when you have to bring in three different ones that also they want to not just give out their votes, they want to play tough and get good ministries. This is also about the jobs that you get. So, you know, it's whoever gets that job and becomes chancellor, he's in for a tough ride.
Thank you so much, Maria Tadeo, there with the very latest on Germany. Now, don't forget, you can watch our special program, Germany Decides, the Chief Executive Briefing, on Bloomberg.com and on YouTube. This is Bloomberg.
from New York City.
We're in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
This is Bloomberg Daybreak with Lee.
Balance of Power on Bloomberg Radio.
Welcome to Daybreak Australia.
This is Bloomberg Technology.
And this is Bloomberg Green.
To recap the headlines.
You do not want to miss this story.
Really good news on the jobless claims
How
front.
are you thinking about those dynamics?
Trading revenues coming in better than expected. Everything cash, $1.4 trillion of cash. One of the most notable aspects of this report that was stellar.
I think we may still see gas prices a bit high for the next days or weeks to come. And most important factor here would be in the short term how the winter conditions will be. With a harsh winter, we may still see a push up of gas prices in Europe and in Asia.
Well, that was the IEA Executive Director, Fatih Birol, talking gas prices earlier on Bloomberg. Now, Tom Keene, co-anchor of Bloomberg Surveillance, joins us now, getting ready for his weekend reading with a great chart. Hi, Tom.
Getting ready for the weekend reading. Daniel Jurgen's scheduled to join us coming up here in about 3-4 hours. Jurgen doesn't start his day, Francine, until 8:30. The new map was my book of the year last year. He's got out the paperback version. He and I are looking at China. Here's the chart that I care about on China. It's not oil, it's $75 Brent crude. It's GDP. It's a view, Francine, from 60,000 feet. And the benchmark is 6%, the pink line. There's talk of real labor issues in China when they go below 6%. They clearly did with the pandemic, down to a negative statistic, and down to 7.9% right now. You can see the basic idea, the vectors towards 6%. That's the tension for me.
Tom, I'm just stuck on someone's day not starting until 8:30 a.m. That's 6 hours after mine starts, and I know yours does too. On the China story, though, to what extent does Evergrande have the potential to exacerbate those problems you were just talking about?
It just points out the fragility of the system. There's different partitions of their debt structure. And the question is, does the government come to the rescue, whether they do it directly or indirectly? The answer, Kelly, is they always do. I mean, that's part of their process, part of their system. Modern bankruptcy is actually pretty new in China.
I want to remind everybody that starting your day at 8:30 is called civilization. What you guys do is not normal. Tom, I'm continue to be struck by the high natural gas prices, but I was looking at a chart with Eddie Vanderwalt, and I saw LNG. This isn't the first time this year those prices have soared. They jumped at the beginning of 2021 and then dropped like a Led Zeppelin. We see huge swings in commodities. So how much attention do we need to pay to these kind of spikes?
I think the spike is there. The tangible call here is the blended commodity call, Matt. And yeah, LNG's this and NG's that, COCL and the rest on the Bloomberg terminal. I would look at the great call that Jeff Curry and others had, Francisco Blanch as well, of a bull market in all commodities, and now breaking out. Does it sustain? I mean, do we get a commodity rally back to when Led Zeppelin was on the charts? Like how I did that?
Very good, Tom. You could always be a tabloid writer.
We're trying to get the chart, the commodity boom back to when Deep Purple was on the chart so we can listen to more John Lord.
Perfect. I mean, we should do a whole show.
I don't think the ladies know what Deep Purple is.
I do, but it doesn't make me feel any younger. Tom Keene, co-anchor of Bloomberg Surveillance.
No
now,
idea.
this is what else
Deep
we're
Purple.
watching. No, but she knows the markets, and
Yeah.
Kaylee's watching Quadruple Witching Day.
I'll bring it back to something I actually know about. Yes, it is Witching Day, Francine. You have options and futures on indices, or on indices.
Triple witching.
Triple witching is technically what they call it now if you don't count futures on individual equities. But what it basically means is there's going to be a lot of volume and a lot of volatility today. Strategists at Goldman Sachs actually estimate $3.4 trillion of equity options expire today. $720 billion of that is expected to be the most for any September expiration ever. So it'll be interesting to see how the price action is manipulated by this today. Matt, of course, a lot of that volume and volatility could come right at the open at 9:30 a.m. and then also at the close.
Yeah, but I think it's smart to point out it is now triple witching, and there's been some debate about this. Single stock futures no longer trade in America. Maybe in some countries, in some markets, but in America, that's over since One Chicago shut down, I think, at the end of last year. And even when they were dealing single stock futures, nobody was trading them. So it's triple witching now, not quadruple witching. I'm
Still
watching this weekend.
Okay, I've stopped listening, Matt. What are you watching?
I'm watching Andrea Dovizioso returns to MotoGP. He was Ducati's Italian stallion, Desmo Dovi, but they kicked him out last year. He's coming back to the Petronas Yamaha team, and they are racing at Misano. Today will be his first day on the Yamaha bike because they're not allowed to test out of set time. So it'll be interesting to see how he does. He's racing on a team with Valentino Rossi in Italy, and I'll be glued to the television all weekend long.
Valentino, if we know one thing, is that thanks to the Draghi effect, the Italians are smashing it in all sports as well, and the Eurovision. All right, I'm watching actually Russia holding its parliamentary election. Now, there's a couple of things that we should be watching out for. So first of all, Russian authorities had threatened to fine 2 companies that weren't actually in line with what they were hoping the app would do. Again, President Vladimir Putin's United Russia Party is expected to win. In total, 14 parties are taking part in the vote, but many candidates seen as anti-Putin are barred from running. So, you know, pretty possibly predictable what we'll see on Monday, but let's see exactly some of the dynamics in that Russian parliamentary election. And then we look also at the ECB inflation configurations. Now, coming up, more Bloomberg surveillance. We'll hear from Dan Jurgen of IHS Markit, amongst others. This is... China, if you look at U.S. taxes, how much time do you spend figuring out these big overarching themes as opposed to what happens with inflation?
There's an awful lot going on at the moment, as you say, and clearly some of the big debates at the moment are the slowing global growth picture, which we're seeing everywhere. And we're also seeing that at a time when inflation is rising and is proving pretty sticky. And to your earlier points, Francine, essentially the interplay between those two is critical. So some of those news events this week, whether it's OPEC and what's happening from a supply perspective, is going to be crucial, or indeed, of course, that US CPI print. So we've spent a lot of time thinking about inflation more recently, because clearly that leads into when we feel you may start to see the taper and when you might start to see rates going back up, particularly in the US. I mean, what might be useful just to explain a little bit is the focus that we've seen from everybody on China. You know, clearly China, huge in terms of the global commodity cycle.
A lot's happening on Wall Street.
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
David, you just hit the nail right on the head.
From businesses most influential and instrumental.
I support the new framework.
We need to invest in our systems.
Bloomberg Wall Street Week premieres Friday with replays all weekend on Bloomberg Television and Radio.
There is wide disagreement on whether we've seen the worst of the Delta variant in terms of the upsurge in cases. Where do you fall on that?
So I see that the curve is continuing to go up, which is worrying. What is making me really nervous today is that there is this like accompanying surge in deaths as well.
Growth
we've had coming out of this recovery has been accelerated.
We're arguably the most expensive market in well over 100 years.
The stock market is going to end the year higher than it is today, but we are in a period where I think risk is a little high then.
Monetary and fiscal stimulus they're going to start to wane. That's going to be the 2022 story.
The problem may come if inflation comes at 4% next year.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
It is Operation Get to the Weekend from New York City for our audience worldwide. Good morning, good morning. This is Bloomberg Surveillance Live on TV and radio alongside Tom Keene and Lisa Abramowitz. I'm Jonathan Farrow. Equity futures down 10 on the S&P. We're negative 0.2%. It's Get to the Weekend, TK, and then prepare for Wednesday.
What am I going to do on the weekend? I'm going to listen to the weekend. I'm also going to read Barry Eichengreen. John, it's my book of the year. We spoke to Professor Eichengreen here on debt. All that debt that's out there. I'm starting the book. I'm going to read it cover to cover. And the Tots on Sunday morning.
Oh, you're
they play
fired
Chelsea.
up.
I'm fired up.
A London derby Sunday morning.
They
I can't
emailed
wait
me, John, they emailed me. They're doing an exclusive deal with Sky Sports in Korea. I'm fired up. I'm all
That's
Tottenham
the important
this
news
weekend.
this morning. Lisa, it really is Operation Get to the Weekend, isn't it?
I was about to say that literally we are just saying our weekend plans because that's how this week has felt. It has dragged on. And part of the reason why, okay, we can talk about our life or lack thereof, but there is this feeling. What is going to change the stasis right now? Is it going to be Wednesday, John?
You're taking the day off, so clearly you don't think it is. TK on Wednesday, we get an update to the forecast, the projections from the Federal Reserve, the ECB, out with a headline from the Latvian central bank governor. The outlook likely to be revised higher for inflation. We caught up Vasilios Giannakis yesterday, who said all it would take is just a change in the probabilities to do something in this FX market, since pretty much everybody, Tom, is forecasting no change at the ECB for a long, long time on rates.
John, I look at 3 moving average studies, and when the 3 moving averages come to a point, that describes stasis, dead in the water, doldrums like the wind in the North Sea. We're not there yet, John, but give it a week or two, and we're there. Everybody's dealing with this massive ambiguity.
It's the story of the bond market. Bonds go nowhere. Let's get your price action this Friday morning. Good morning to you all. We'll try and make it a little bit more exciting as the show progresses. 133.61 on 10s. Yields go nowhere. Nowhere this Friday, pretty much where they were last Friday and the Friday before that. Equity futures down 11 on the S&P. We're negative 0.25%. And in the FX market, a little bit of a lift in the euro. Some strength there, Lisa. Euro dollar 117.83.
Yeah, look, it hasn't been the most exciting week, but there have been some incremental developments that I find really interesting. And one of them is sort of this looming credibility crisis among policymakers, as a lot of market participants say, look, it all depends on policy. That is what we're looking at. This goes with respect to health officials, and it goes with respect to monetary and fiscal policymakers. Today, the FDA panel is meeting on vaccine boosters to talk about whether to recommend that everyone get vaccine boosters. This comes as Pfizer says, yes, everyone get vaccine boosters. And by the way, we also make them. Whereas there are some scientific advisors of the FDA who resigned because they did not think that there was enough evidence to support this recommendation. Today, as Kaylee Lyons was talking about earlier today, it is quadruple witching day for U.S. markets. It's the expiry of 4 different major contracts. It's expected to be the second biggest ever trading day for single stock contracts. I mean, just it's supposed to be a tremendous day. Does this really matter for the direction of price? It is debatable. However, some people say that fundamentals take place more as people are forced to close out and reprice certain derivative contracts. And at 10 a.m., University of Michigan U.S. September Consumer Sentiment Survey comes out. I am looking at this metric, which is the 1-year inflation expectation by consumers. It has been going up dramatically. The previous reading, it was the highest since going back to 2008. How much does that climb? And then how much does the 3 to 5 year projection, the 5 to 10 year projection, really increase as well as people look out beyond some of the disruptions that we've seen, John, to another future that the Fed, frankly, is having a real hard time gaming out?
Lisa, thank you. How big's the balance sheet of the Fed now?
8.5, almost $8.5 trillion.
4:30 on a Thursday.
Yeah.
Lisa's logged on to the Bloomberg. I always see that green light, TK, waiting for the balance sheet information. I check in on everyone, Lisa.
Thanks, good
John,
to know, John.
I haven't done this study. This is a serious question you ask. The sum of the balance sheet of the Fed, ECB, and Bank of Japan. I haven't done that work recently.
And it's going to stay that way for a long, long time, even after QEN. So let's get to our first guest this morning, Marvin Barth, Barclays head of FX and EM macro strategy. Marvin, let's start right here. Headline crossed on a Bloomberg moments ago from a governing council member at the ECB. The inflation outlook is likely to be revised higher. From where you're sitting, plug that into the FX market for us.
Good morning, Jonathan. Thank you. Yes, this is a problem that all central bankers are facing right now, is how to deal with what they see as transitory inflation, but it keeps being longer than they expected. We talked about that the last time we were on this program. That certainly does raise some of the risks that the ECB may at some point have to adjust policy earlier than markets anticipate. But we're still talking about an economy that has a very low potential growth rate. Its long-run inflation prospects are not particularly positive. And I think you're going to have to see a lot more evidence for them to actually move towards hiking. And as a result, we continue to look for the euro to be the weakest among the G10 currencies. We're forecasting it continuing its slide down towards 115 next year.
Is politics a part of that, Marvin? European politics?
Definitely in the background. I think there's definitely some risk there. Let's remember that Europe still does suffer from a lack of a fiscal union in the background. There was a lot of positivity around that last year that did help boost the euro with respect to the pandemic move and the moves towards common bond issuance. But they still have a long way to go, and we have a big election coming up the weekend after this one in Germany. We're going to go from 16 years of Merkel as the de facto leader of Europe to the first three-party coalition in German history. We have no idea what that coalition is going to look like. That's still a huge source of uncertainty. But the key point is you're not going to have a very strong government in the biggest economy and largest populace in Europe. That's going to delay any movement towards a fiscal union. And it also may set the precedent for potential bad outcomes in the French election next year.
Marvin, I'm going to cut to the chase. You have a brilliant figure one in your latest research note that really describes how far, far, far behind EM is in vaccination. Is that an opportunity? I mean, this is really serious medicine here, but are they so far behind that the 2022-2023 call is to buy into the great unvaccinated continents?
Well, you could have made that call earlier this year. It didn't happen. At this point, we're starting to see the global economy reach its inflection point where we're still expecting a positive outlook going forward, but it's not going to be the same vigor that we had before. And also, we've talked about this before on previous episodes, this rethinking emerging markets idea that increasingly automation is moving the world away from outsourced globalization and towards localization. That's not a good thing for emerging markets. And in fact, COVID has just accelerated that process. So it's really hard for me to get that excited about emerging markets at this stage. But I agree with you, Tom. There will be some benefit that's going to come from their convergence in COVID vaccination rates.
Marvin, before we let you go, we were talking about my activity at 4:30 p.m. every Thursday, which is to look at the Federal Reserve balance sheet. And it's not just the Fed, it's the ECB, it's the BOJ, it's pretty much every developed market bank that is expanding their balance sheet. At what point will this factor into FX trading in a meaningful and traditional way, which is the more money you print, the weaker your currency?
Okay, well, this is always one of my favorite topics, is who actually creates money? It's actually not central banks, it's banks. You don't have any money with the central bank, neither do I. Those are called reserves. Only banks have those. That's what's on the Fed's balance sheet. What we need for actual money creation is for banks to actually create money on the back of that. That ain't happening because there isn't money demand for it. When that happens, I'll start to worry more about it.
Marvin Barth, good to catch up with you, sir. Always good to hear from you. The Barclays head of FX and EM macro strategy going into the weekend, but coming out of the weekend, the focus very much on a Federal Reserve decision next week with a news conference with Chairman Powell. And Tom, the forecast, the summary of economic projections with that dot plot, which no doubt the Federal Reserve Chair will tell you not to look at, of course, if the dot plot does not jive with what he's trying to tell you.
Yeah, I'm not a big fan of the dot plot, as you know, but I will say that more than recent years, September and December here are combined meetings. John, I remember when December was a non-event, total holiday non-event. That's not true this time around.
We had a survey out this morning, Tom, from the wonderful Steve Matthews, together with a team down in DC, suggesting that November is the one to watch.